Go ahead.
Yeah. All right. Welcome, everybody. This is an epic Tesla Q3 earnings call. We're going to watch the live stream together with us today. We've got the panel, one of the best panels out there. Here's what's going to happen today. First of all, it's we're starting the pre-show. It's only going to be 30 minutes until about 1 o'clock Pacific time. Sometimes a few minutes afterwards, Tesla will drop their financial deck. We will take a look at that in detail. Take a look at every slide and explain all the financials that they drop. Then at 2:30, so that's an hour and a half later, there will be the official event. We will live stream that here. It's audio only, but we'll hear directly from Elon and the executive team what's happened to Tesla's earnings last quarter. And then afterwards, we'll do a post-show analysis. This is who's joining us today. We have the best Tesla retail analysts here with us in the panel. You got Jeff Lutz. He's a manufacturing supply chain executive in the past and his expertise there. You got Alexander Mertz, board and governance expertise. James from Invest Answers. We're co-streaming it on his channel as well. Finance and stock analysis, of course. CERN will join us later, finance and robotics. Larry's here, business and energy. And then shortly we'll have Nick Gibbs join as well, and Joe Bakhti, both investing, stock analysis, and AGI. So this is the whole group out there. This is what the Wall Street is expecting right now. Earnings per share to come in at 50 cents. Actually, I think earlier this morning it's 55 cents now. Revenue to come in at $26.5 billion. Welcome, group. How's everybody doing? James, kick us off. Tell us what you're thinking about Wall Street expectations.
Yeah, it's tricky because typically when things sell off ahead of earnings, they tend to pop after earnings. If they're strong before earnings, they tend to sell off after earnings, no matter how good the news is. I'm looking at things like options action, short interest, stuff like that. We can dig into some of that later. And the whole market is red today across the board, pretty much. And a little bit frenetic action, actually, but looks like Tesla's getting strong into the close. A little bit stronger, I should say. And we're looking at a couple of key resistance levels. At 447 is a real prickler, but we have support around 415. As usual, it's a roll of a dice. And the minute, as usual as well, the minute the earnings are announced, it's already ancient history. Then it becomes forward guidance, and that's all that matters. So that's the skinny so far.
Okay, thanks for doing that. That's a stock that's jumping in a minute by minute. We'll watch that closely as well. But Jeff, you were saying earlier that in addition to just a stock movement, you thought that maybe the sentiment coming into Q3 was a little bit more negative than they need to be. Is that what you meant?
Yeah, I mean, the market's selling off today. I mean, if you look at what Tesla's done since announcing deliveries, units up, energy up, inventory down, all the things in new models introduced. These are all the things you want to hear. You've got good China numbers that were released on Monday. We're seeing some stronger numbers relative to the prior few quarters in Europe. We probably had a very strong October in the US. And of course, we know we had a strong Q3 in the US. So I think what people want to hear is the auto business going to connect us to our future businesses in a very stable, predictable, somewhat reliable manner? Do we have the products we need? Are the products that we're about to ramp up, are they roughly on track? Talking about Cybercab. And is there anything else you can tell us about this current business connecting us to the future business, and any insights on this quote unquote future business, which is really current? It's starting now, but it's not ramped up. It's not in its full instantiation. But tell us something about the future business. Do you now have confidence of version 14 going unsupervised? Do you now have confidence that we're in the final twist of the knobs for version 14, allowing an unsupervised robo-taxi experience that, once through regulatory, can be expanded more broadly? But I will tell you this, Tesla doesn't have to say a whole lot, because you can, what this community does is a great job of looking at the publicly available information out there and drawing conclusions. And if you're talking about future business, and you're talking about the hundreds of requisitions opened to build an Optimus, and you're talking about the hundreds of requisitions to expand robotaxi. That is that leadership team. That is Elon saying, I am ready to commit. I have been ready, and I am committing capital to connect the auto business to these future businesses. We see them as being ready. So it'll be interesting to see what they say.
Yeah, we'll follow that even more closely, all the job openings. Welcome, Alexandra. Oh man, you and I did a live stream earlier because of the board. There was a appeal. Just the Delaware Supreme Court went live, and they did a kind of their examination of what's going to happen. So, to what extent, Alexandra, is that going to be an overhang over this Q3 earnings call? Like people really going to wait until November 6th to find out the results of the election or the vote?
So there are two different topics. The appeal, the oral arguments we did when you were still gone, and I'm so happy to have you back, Herbert. You know, sometimes it's good when you leave, and then we appreciate how important you are when you're back. So very happy to be back. So the oral arguments went very well. Actually, Larry did a really great summary of it. And I invite everybody to read that. It was 4 oral arguments. It couldn't have gone better. Now, that doesn't mean we've won yet, right? The earliest we expect a decision for that is now end of November to end of December. The longer it drags out, the more our chances go down, I would say. I think if we win, we'll know it sooner than later. Is that an overhang? Well, that's been an overhang for a long, long time. But let's face it, there is a solution that Tesla has put in place. There's a plan B. It costs us on paper more money. It costs us on the GAAP standards more money. It's not a cash expense, but there is a solution. So is that still a huge overhang? I doubt it. Then there's the shareholder meeting in exactly 2 weeks and a day. I actually think that's a net positive. I do believe retail shareholders came out strong. We already heard from ARK that they have voted or made up their decision. Institutions will always vote in the last 24 to 48 hours, so they are not in yet. But Tesla obviously knows the numbers, and we're in a completely different playing field. I cannot stress how different Texas is from Delaware. Because we're in Texas, the ratios necessary to win these votes are calculated differently. What we need is 50% of the votes for the important topics, like Elon's compensation, like stocking up the employee option plan. 50% plus 1 vote. And that's the important difference. Elon can vote. So Elon has 14.5% of all outstanding votes, and the 50% are of votes casted. So it's not of all outstanding 3.3 billion shares. It is of those that vote, because we're still running in issues, CMC in Australia, Nordea in Scandinavia, quite a lot of German banks, some Austrian banks and whatsoever, who are still making it difficult. So those people, last year, we implored you to try the impossible because it was important under Delaware law for us to move to Texas to reach a certain threshold that was calculated on all outstanding votes. That's not important for the important stuff this time. So while I actually think the shareholder meeting is a positive for today, because since I told you earlier, institutions have not voted yet. And while we are always very impatient to hear these earnings calls and hear from Elon, the ones that's their job are those institutions. So these institutions are listening today, and this is more or less the last time they will hear from Elon before they cast their vote in 2 weeks. So I expect him to be as upbeat as possible because he needs to convince them. That's easier than a roadshow. I also think he's quite confident on the outcome of the vote for the reasons I just explained, but obviously more support and higher numbers we get, better it is. So I actually think that from my side, the governance side, the voting side, and all that, we actually have a lot of green light, and that's why I dressed in green.
That's why you're dressed in green, huh? Okay, we'll talk about what kind of Elon we're going to see. Before we do that, let's hear from you, Larry. Here's the numbers. Tell me what numbers you're expecting. Tesla's Q3 revenue and net income. They've changed every year, of course, since going public. Here it starts off at 2009, 45 million revenue. Now we are at 25.2 billion of 2024. What do you think 25 will be, Larry? And then net income is at 2.2 billion earnings. What do you think 2025 will be?
Yeah, I expect revenue to be a little bit higher than 25 billion, but not very much higher, just a tick or two higher. I really want to talk about earnings rather than income because I'm not sure whether you're showing GAAP or you're showing I don't know which income figure you're showing, but I think we're going to be in the 60s for earnings per share, GAAP earnings per share, because I think that and the street is expecting mid 50s. I think we're going to be in the 60s, if not the mid 60s, and so I think it's going to be a very strong beat. Top line, minor beat. Bottom line, a very strong beat. That's my expectation. But all of that pales into insignificance against which Elon Musk shows up today. He's been very truculent today on X, which one hopes that's not the guy who turns up tonight.
What's going on, guys?
We hope the guy who turns up tonight is sunny, optimistic. Yes, we've turned the corner. You guys are about to see it. I'm going to tell you all about how robotaxi is going to be rolling out next year. I'm going to tell you all about how Cybercab is going to roll out next year. I'm going to tell you all about how Semi is going to roll out next year. I'm going to tell you all about how we're going to start manufacturing Optimus during the course of the year. And, it's just, and I'm going to tell you how, exciting the world is going to be next year. And we've got some surprises coming for you next year. If he says that, I think we're set for the rest of the year and into the new year. I'm not, as you know, a short-term stock, analyst, and I don't do that stuff. But I think it would be a magnificent foundation for the coming year. And I'm hoping that some of the analysts and some of the retailers will talk in broad terms about expectations for the coming year so that we understand how to think about, what the milestones look like for the coming year.
Thank you, Larry. Oh, Larry, first of all, thank you for hosting the show this last week. Goldberg, people are calling you Goldbert. Goldbert. Brighter with Goldbert. But that Cernbert was a little evil. I gotta chat with him a little bit.
Yeah. He's taking it over, man. He's
I gotta
getting
chat
better
with him.
than me. He's getting better than me.
Hostile takeover.
Yeah, okay. I gotta handle Cernbert a little bit, the evil version. But well, what kind of Elon? I mean, yeah, he has been a bit. I've not been following X at all, but I've seen a few insults to the Secretary of Transportation.
Us? No. Let's start with the important stuff. So we said we missed you. Did you miss us?
I don't know.
See that guy?
Yeah.
See that? Nothing. No love.
Actually, I really did appreciate that I did not have to follow every single bit of news, and I had to prepare it the day before. So that was like, okay, I can relax and just completely forgot everything. So, yeah. But it was great to see you middle of the trip, and I think you did a fantastic job, and it was very exciting, right? Because that was the Delaware Supreme Court. And we all thought it went really well, right? That it could be the Supreme Court will overturn or will vote in favor of Tesla. And Larry, you asked Grok, and Grok said highly likely. What's your percentage?
It wasn't just asking Grok. I argued very strongly with Grok. We had a colloquy. And so one of the things I did is summarize. I got the transcript. I created the transcript. They're only just, I think they're going to release it this week, but I got it organized to download it on YouTube, and then I cleaned it up and I took it and I went through it very carefully, and I had this whole argument with Grok about it and got the final sort of summary of everything that happened, and then got the legal opinion, not just from Grok. I got the legal opinion from multiple different sources, all online, and the vote was overwhelmingly in favor of from the from the transcript in favor of Tesla winning. So, the law firm of Manus, Grok, and Goldberg, or Goldberg, Grok,
Who's
and
Manus?
Manus is a agentic AI, uses other some frontier models, but it's able to send it out to multiple different applications, which made a lot of the work a lot easier. But
Can I become a partner in your law firm, Larry? I like that.
Didn't even
I feel
consult
like
Alexandra.
you kind of are, because we use some of your material. Without paying you, we took your.
You take example from Herbert. That's the problem with Herbert.
Don't
Once
pay
the
people.
important-
Yeah.
Squeeze
Anyway,
them
so
out.
I'll add Mertz to the partnership. Yeah, for sure.
Oh boy, Mertzbert.
Mertzbert, listen, what I get paid, you'll get my share of it.
That sounds wonderful. I'm going to be so rich.
Boy.
But realistically, if you actually do a forensic analysis of the arguments, it seems that the Tesla argument was very, very strong on multiple different points of law and multiple different points of, Delaware, Delaware, what's the word for it when it happens they've done it in the past, Delaware, whatever. So
Precedent.
Thank you. Yes, Delaware precedent. So on law and on precedent, they're standing in very good stead, and we'll see.
Okay, so let's get back to the question. Was Elon is out there and he's like insulting the Secretary of Transportation, Sean Duffy, James.
Amongst many other people.
Oh, is that right? That's the one I saw that matters more for me as a Tesla investor. James, should I be freaking out or should I be okay?
Say that again. I missed that.
I mean, should I be worried that he's attacking the Secretary of Transportation?
Well, he I don't know. They were friends before in that meeting in Texas. They hung out, and it's very hard to say. I don't think these things anyway. At the end of the day, don't have any impact. I wouldn't be concerned.
Yeah.
Duffy is very much about being ready for the future, and he looks at transport and autonomy with a futuristic lens and doesn't want to fall behind. So he'll do the right thing.
Yeah.
He has a cute haircut. I like his haircut.
We know how much you like that guy, okay? We know.
I do. I think he's cute. I mean, he
You
is.
think he's good looking, yeah.
No, that's about it.
You like his haircut as much as you like mine?
No, as much as I like mine.
You look great. So you wore green, but that doesn't mean the stock will go green today. Do you guys think it's going to be up or down by the end of the day? It's always down, right?
I mean, end of the day. It's end of the day is in 8 minutes.
Yeah, he wants you to tell what's happening in 8 minutes.
But I did a little poll, Herbert, actually, on expectations, and I have a little chart. So the trend is up for Tesla, which is good. And the poll that I have, typically, when I do these internet polls, whatever the majority say tends to be wrong. So basically, these are at critical levels, breakout above 445, which is kind of resistance. Pullback, basically tanking 392 to 424. That's the worst case scenario. And sideways, plus or minus $10 after the earnings call. And typically after the earnings call, it fluctuates up and down. But the majority think pullback because historically they're accustomed to us tanking after earnings. We know earnings will be good, so a lot of that is priced in. But we also know it all depends on what he says going forward. So is he in a good mood or bad mood? And what's going to happen?
Is this on today or is this like 3 days from now?
This is basically what will happen within 24 hours afterwards.
Okay.
So I think, if you look at the sideways and the breakout, that could be where we go. But at the same time, the market is very weak. The macro is very weak. We had reports actually coming out of Germany, which is pretty cataclysmic. We should probably talk about ICE and General Motors and other things as well. I'd love to hear, Alexandra, what you think of this. The production ceasing in Volkswagen because they don't have chips, because of the stuff that the Netherlands have done. It just shows you, and Jeff, I'd love to hear from you too on this one, is how bad these companies are at planning their supply chains. Is just embarrassing. From when they've got 2 weeks of supply and inventory, and something happens in a country and boom, they're out of business. I mean, is that not unbelievably fragile? Or am I
The
reading
U.S. auto market is going to be on a bit of a sugar high as they don't have to build loss leading EVs from their perspective. They can't make an EV profitably. 4 of the top 10 non-Tesla EVs that sell in the US aren't made in the US. So those are all coming in under tariff, and they've essentially clamped down. So these amazing sales figures you've seen the last 90 to 180 days is basically them burning through their inventory. And they've come out and said, like, we're not going to build as many of these going forward. And these forward investments we're doing, we're actually not going to do as many of those anymore. So they're going to take this temporary sugar high of building on an average ASP $51,000 ICE vehicle, and they're going to keep going on that. And that's why they have single digit and low double digit PEs, because they don't see these CEOs and these leadership teams at these companies building what the future of autonomy is. And you can debate 8 ways to Sunday if Tesla has it figured out or not. What you can't debate is the portfolio and the strength in software, AI, services, and things besides bending metal. But if you just get it down to a bending metal and producing cars contest, Tesla makes EVs profitably. These other companies don't. The China situation is opaque. It's not clear. There may be a few models that are being built profitably. It's not clear. But overall, very kind of a very stressed out supply chain and a very stressed out sales channel. And we see it in their actions and what they're doing. And we see them being stressed as they try to go abroad. So the auto industry is in an interesting spot right now. So, you know, GM popped on their earnings yesterday, but I think the market response is equivalent to the PE and how the PE is actually measured on the company. Very low PE, very low expectations of far out future performance. So if they have a good 90-day hamster wheel, run on the hamster wheel, they're getting a good pop. I think Elon and Tesla are going to deliver the kind of news that is needed because, and Alexander brought this up, and I brought this up, that this shareholder meeting in 2 weeks is not going to come out here. He's not going to be angry. He's not going to be ornery. The tweeting world and this other world, they are going to, I believe they're going to be different worlds. And we know that how he takes on meetings in these very serialized, compartmentalized manners. He doesn't bring everything over into every session. He really knows how to separate and do this work. So I don't know, I could be completely proven wrong, but there are so many things for him to talk about in terms of the future of this business, and such a good quarter that we're coming off of. So I would be surprised if there's some sort of major bomb dropped in the meeting. I have high expectations.
All right. Thanks, Jeff. So what is it, 12:57 Pacific time? We are following very closely the webpage here that's usually at 1 p.m. Pacific time. We will get the shareholder deck, the actual financials. And then, Alexander, you shared here a post from Ed Ludlow of business.com, and he has
Bloomberg.
Bloomberg, and he's explaining when we expect the print to actually be shared. Sometimes we think it's exactly at 1 o'clock. Wait, 16:10. What is? Oh, that's Eastern.
Well, that's
Eastern
time.
Yeah,
Yeah.
4:10 Eastern.
Herbert, there are other time zones besides Pacific.
Yeah, no, 1 o'clock is 4 o'clock. 4 o'clock Eastern, 4:10. So he said last time it came out at 4:10 Eastern, but the high likelihood is 45% chance it'll be at 3 minutes after the hour. And then here you go, 9%, 45%, 20% chance, and so forth. So if we're waiting, as we do sometimes, when it's going to drop, here's a good probability list. Yeah.
And we're very strong into the close too, which actually is a bad. I'd like us to stay weak and then go up after in the close, but
Can't have it all, James.
yeah. Oh well, we'll see. Got 1 minute left. A lot of very good options action as well. A lot of people going nuts buying 700 strikes, 900 strikes. You know, thousands and thousands of call options.
Joe.
Speaking of,
Hey, Joe.
Hello, everyone. Happy
you go.
earnings day.
Why are you all in black? This is
I
so
know I
sad.
should change to black so that you pop. You pop.
I pop
Exactly.
anyway. You're not out popping me.
I'm not out popping you.
You're not.
We'll do it all for you, Alexandra.
Thank you so much.
We are following this closely, so we will refresh this. It is 1 minute to. There we go. It is exactly 4 p.m. Eastern, and so we'll watch this when it drops.
What do you mean when it
We're
drops?
gonna watch this
What do you
now
mean,
for 10
Herbert?
minutes. Come
When
on,
they
do a little
post
bit
it,
of
when they post the
animation.
I don't make the stock drop. Don't say when it drops.
Oh, sorry. Gotcha.
So, Joe, what do you expect? What do you expect of today's numbers?
Well, I put out a video. My bet is the one thing I'm most sure about is that we don't see a major drop. That's my bet. Because I think there's too much positive stuff going on. I think Elon has also too much of an incentive of not being too much of a drag and being more upbeat. So I'm kind of optimistic, not in the sense that I would bet on the stock like going crazy up or something, but I think it's a unusually low risk that we see a major drop. That's my bet.
What's a major drop to you?
10%. I'm betting on this, so I have to be. It doesn't mean that I'm negative. I'm just saying I'm most sure. If I had to make, I made a bet, short puts for 4 or 5 strike price. I think it's unlikely, very unlikely that we go there. And I think most likely I think it's neutral. That's what I think, because I don't see too many surprises coming. But of course, the nature of the surprises.
What do you expect the next major event or news or whatever that really brings Tesla above 500? What would it take? Is it the Cybercap release? Is it what is it?
Well, I think the November 6th will definitely serve as a magnet up, but it might be a sell the news event unless they reveal some crazy Optimus situation, which they might. So I think. Yeah, I think if we, I think we will go through some choppy market, maybe in October, macro-wise. But I think we are setting up for a year-end rally, potentially. So if Tesla does anything right in terms of, for example, removing safety driver or something in November, in December, I think that could push it over 500. So if the market sets up for a rally, I don't think we need much to get over 500, to be honest. We just need some
James?
good news.
Yeah, per the poll, we actually have a live poll going as well on YouTube. A lot of people are feeling breakout, and we've just got very strong into the close. We're up to 441 right before the release. I do believe we could end up, depending on how Elon is, above 445. The world is changing. We've got interest rate cuts coming. Money printers are coming. We've got the competition reeling. You got, robotaxi rollout that's scaling. There's nothing but tailwinds. I can't see any knocks coming our way now.
I think it's here.
Yep.
Okay, I'm going to download it. We'll take a look at it. It's dropped. Sorry, I should not supposed to use the word drop.
Nothing happening to the stock right now. Still plus $1 roughly.
140, 1.4 gap, 188. Record cash flow. Oops.
Rough.
Record cash flow is hardly a surprise, right?
Where should we go first?
I think generally the first page gives us a very good sense. 1.5. Oh yeah, good. That's very good.
What's good?
Earnings,
profit.
GAAP operating profit is good.
Mhm.
It's close. It's not quite 60 cents. Not quite.
Free cash flow, 4 billion. I was expecting 1.5.
No,
Hallelujah.
Crazy
Look,
high.
record free cash flow of nearly 4 billion.
Alexandra, wheel it in, because they reduced inventory by this dramatic amount. We knew this was going to happen.
Well, not
1.6.
the limit of 4 billion. And
Oh
4
yeah.
billion.
Oh
that's
yeah.
enormous.
I think we spoke about that, Jeff.
Free
I
cash
think yeah.
Yeah, so nothing new here. I just read all this so far. Let's jump to the
Let's look
outlook.
at GAAP. I'd love to know what GAAP.
Nothing much here. There's no guidance.
Very conservative view. Yeah.
Nothing here. Cash is pretty. Statements pretty
I like
muted.
what they say in profit.
First generation production lines for Optimus are being installed for anticipation of volume production.
Okay, so everything's on
Wow,
track.
that's
Wow,
important.
Ooh, oh, I see. Optimus. Oh my gosh.
that's pretty hot.
Ooh,
Maybe not for Wall Street, but for
Cybercab, Tesla
Jeff-
Semi, and Megapack 3
there
are
you go.
scheduled for volume production starting 2026.
This
This is
huge.
very important. First generation product. Yeah, so this is what we hope to hear. That's what I said I would like to hear, and I think that's what we're hearing.
Yeah.
Okay, Jeff, explain to us this statement here. First generation production lines for Optimus are being installed in anticipation of volume production. So that sounds like it's happening right now. Explain what that might mean.
Yeah, I mean, it's a process. It plays out over, it could play out over several months. But what this means is they believe in their testing that they've done on this version 3 of Optimus. They believe like this is a recipe that can enter production. And therefore, if you believe it's a recipe to enter production, you finish the design work, you finish the details of tolerancing, but you've now released your production teams to go off and order the capital equipment types. You know what you need in terms of production. Now the end effectors, the things that are going to actually be coming in contact with the bot during production, those have shorter lead times, and those are the things that will change most. The latest changes that will be made. So my guess is larger capital equipment ordered, and the space is set aside in the factory. The facilitization is starting, and they can start installing the necessary steps. And what you want to hear is, when are we going to get to a start of production date?
Jeff,
This
what
is
would
the
you
biggest
say?
thing.
What would you say? First generation production lines for Optimus are being installed. Could you put a number on that? What would be your best guess? Like, what is the capacity of a first generation production line? Is it like tens or hundreds of
2,000 a
thousands?
month.
Well, production line. A production line. We don't. So we haven't heard. What you need to hear from Tesla are a couple things. You need to hear what the total process time is to build an Optimus, and you need to hear that click rate, that number, that process time number, and then we could start doing some math. But for Tesla, these production lines versus an auto production line be much smaller, and they're going to be focused on what volume or output per square millimeter of this line exists. So do we know a number today? No. But when you're installing a production line, this isn't an NPI line. They already have new product introduction lines, which is kind of that between state of early prototypes to transitioning into production. We know they've hired for those people before too. So now you see all the requisitions in the system for Optimus. So these lines, I'll give you a number. A smartphone line can typically do somewhere between 1 and 2 million units a year at scale. So building a humanoid is different. There's similar complexities of volumetric density, but they should be building lines that can produce several 100,000 to 1 million pieces a year per line.
Guys, there's some very important numbers we really need to get to.
Gross margin.
Income, gross margin is out of this world. It's 19.8 gap gross margin. Operating margin is up 10 to 10.8%. Adjusted EBITDA margin is 18.5%. This is not a beat. This is an absolute explosion in terms of operating excellence. This
Larry,
is
on low production too.
Yeah, that's what I'm saying.
And no more inventory.
Yeah, look, it's incredible. I'm astounded.
But
Now-
how much
now-
of that is because of energy? Is this auto only, or is it across?
It's auto and energy. It's everything. Look at your operating expenses, down $300 million from last quarter. Operating expenses are down $300 million from last quarter. Income from operations is up to 2.7 million from 1.6 last year. I mean, this is an incredible result. Operating margin is up over 50%. Guys, this is not a beat. This is just an explosion. I mean, wow.
Well, what do we think is happening, Larry? What one theory could, because of the low production number, to me, it looks like more of the sources of margin are coming from non-hardware potentially. But we need to.
Yeah.
Is this more FSD? Is this more higher margin services?
I think you're onto something here. Something's happening, Jeff, because you don't move from a gap gross margin of running at about 16 point something for like 2 quarters, and then before that 17. It's been on the downslope, and it's down to 16, and we've jumped to almost 20%.
If you look at the profitability here, though, it says lower one-time FSD revenue recognition year-over-year is described above.
Lower.
That's something else. That is, they have always tucked away the FSD revenue, and then they are now slowly integrating it. And
No, but it says lower.
since that part, but they integrated this quarter less because the Cybertruck FSD is not. It's explained higher up because the Cybertruck and some other features have been delayed. So that's. I mean, it's technical, but it's just a matter of how much of the reserve they have released into the result this month, of the already cashed in results.
Something else going on.
The market's going to have to contend and understand, okay, the regulatory credits are going down, and how did gross margins go up? And it says at the bottom, growth in services and other.
They attributed also to energy, increase in vehicle deliveries, growth in energy and storage, growth in service. Increase in operating expenses driven by SG&A, AI, and other. Increase, I thought it was a reduction. Am I reading these dates the wrong way? You know what? I'm reading them in the wrong order. That's what must be going on. I'm reading this in the wrong order. You go back to that. Yeah, it goes from left to right. So it's exactly the opposite of what I said. It's exactly the opposite.
But I mean, sometimes we get carried away with too many details. I think the big picture is look at quarter end cash equivalents, and investments. $41 billion last time. I remember I was looking at 37 billion or something. So we see here a company that is continuously increasing its cash stack, which is crazy given that they're all about R&D, Optimus, Robotaxi, and all these crazy AI build-outs. So I think that's really the number I'm always looking at, the big picture. Tesla keeps increasing its cash stack in the middle of a crazy AI R&D revolution, which is crazy.
Your EPS rose from 0.27 in Q1 2025 up to 40 cents in Q2 of 2025. It's now 50, and that's diluted, fully diluted. So fully diluted has risen quite dramatically, but its net margin, non-GAAP, has remained actually slightly down. but the total revenues are up.
28 billion.
Yeah, let's look at semi.
Where do we go?
Let's look at if we can get some insight into what's going on with Model 3, Model 3Y, total end of quarter vehicle count, global inventories, storage. Where can we find storage gross margin? That would be very important, since it's now become such operating margin and just energy generation and storage revenue 3.41, big jump. Total gross margin. I thought we have the breakout of the margins.
They have 81,000 H100 equivalents in Cortex. They didn't really make much of a statement on robotaxi, no future statements.
$500,000.
The energy margin is 31.4%. The energy margin is 31.4%. It's the 3.4 billion income minus the 2.34 billion cost. So we're at 31.5, which is crazy good.
The stock is down $5 in after hours, so market doesn't like it as usual.
Well, I think that's very marginal, right?
Yeah.
And it's
Really
the
annoying.
earnings per share. I mean, that's all they see, and the earnings per share is lower. I mean, the regulated credits went from 439 million last quarter to 417. So it's not as if they were just dropping away. Obviously, we're by far not in the 700s anymore than we were a year ago. But it's not as if this was such a huge drop.
Yeah. Well, we talked about this on so many shows that there's other sources of these besides the U.S. This is not going to go to zero. But I mean, that was an anti-Tesla talking point. But I mean, it'll certainly be under stress, but it's still going to be there. Where is their inventory? $10 days of supply inventory.
Is that a record low, Jeff?
It's a record.
Yeah, you don't actually want it that low either. So they actually need to push this number up, because the other side of that is stocking out and not having product when people need it. So I don't think they want this below a couple of weeks. I don't think they want this below 14, 15. So they must have just had to blow it out, partly probably in the US. But I mean, this is a global number. This isn't, this is a global number. This is, I would say, fairly staggeringly low in terms of inventory. And people say, well, that's how they got the free cash. Maybe it's part of the free cash story, but it's not all of it.
So they removed the sentence that they've had in every single earnings call for the last 6 earnings calls, where they referred to the new vehicles that they're producing. But can you explain this sentence here? So we remain focused on growing our sales volumes through a differentiated and efficiently managed product portfolio, which includes leveraging and optimizing our existing production capacity before building new factories and production lines. Is there another product coming or not? Because they don't mention another product, but it kind of alludes that there might be.
Yeah, what they're basically saying is that they're going to get more out of the three of the Y before they. But I mean, they are building a new factory there. It's called a Cybercab. So they're doing both. It's this whole thing of people out there like build a compact, like build a different ID compact car. Well, it's called a Cybercab. So they actually are investing in that. But it's these calls to like throw a steering wheel on it. They have to do things in a particular sequence. That's the big argument. You could say go for that versus going for the cybercab. I think Elon and the team, they have the data that says FSD 14 is going to be hands off and there to meet cybercab getting into volume production. That's the bet that they made over a year ago. And if there was a problem in that, they could have course corrected. So there's alpha in even just understanding that and what he says on the call about that. If there was a problem with FSD, with going to unsupervised, with going to non-monitored robotaxis, Tesla would have course corrected and potentially produced another vehicle, a compact, lower cost vehicle. That, to me, that's information by them saying we're still all in on cybercab and autonomy.
There was a
Did you
little
guys
piece-
go ahead, James?
Sorry, there's a little piece in here buried. I scanned it and then I forgot about it. That the model version 14 that's rolling out is the same as or a portion of the Robotaxi FSD model. So we always had that question: is it the same or different? Looks like Robotaxi. It was always version 14.
Yeah,
Yes.
and they would want to unify those
Yeah.
code lines. They don't want to be producing. They've already have different hardware variants of product out there,
Yeah.
which causes complexity. I mean, what they're doing is amazing. They have vehicles of 7, 8 years old, and they're still getting software. Really, the smartphone industry is still trying to figure this out. The computer industry is still trying to. They're just starting to ramp this up now, and Tesla's updating cars from 2016.
And can we do a roundtable of how you guys interpret what you've seen here so far? Is there anything? What was the best thing you read? It sounds like it's nothing burgers, or is there some negative thing? Who wants to start?
Well, free cash flow is very impressive. The margins are impressive. But the whole tone of the whole earnings report looks very muted. And I don't know why.
Well, if you just look at exactly the opposite of what I was getting excited about just now, that the earnings per share is down by way below even Wall Street's anticipation. It's 43 cents basic and 39 cents diluted. So
Instead of 50 cents, which is what they were expecting. Yeah.
they're expecting 50. And, Troy was up in the mid 60s. So I think this is the big disappointment, and that's the reason for the drop in the stock.
And have you figured out where it comes from? I mean, there seems to be all these additional expenses.
No, the margins are good. The margins are very solid. The margins are exactly equal to last year. That
It's lower regular credit revenue and lower one-time FSD revenue recognition.
that's right.
They seem to be the two problems. And I don't know if they're chalking that forward to Q4 for some reason. Why would they do that?
I mean, I'm still looking into this, but it also seems that R&D and SG&A are up 50% year over year.
Yep.
Yeah.
So it's a huge increase in R&D spend and
That's good, right?
selling and general administrative expenses, which is a good thing. Just reflects, all the Optimus activity and the Robotaxi activity, and that of course eats into. The
And it looks like
margin.
they added 30,000 H100s or equivalents.
Yeah, they're now at 70,000.
80,000.
80,000.
So it's 50,000 last time, if I recall. 81,000 exactly.
H100 equivalents. Yeah, I think they're beefing up the B200s, so they count for what, two each or something.
Yep.
Yeah, so I think all in all, I think the cash flow explosion is a little. I wouldn't overrate that. That's because working capital unwind and capex. So because they manufactured less cars, so I wouldn't overinterpret this. I think mostly this is about an R&D boost that eats into some operating margin, which is totally fine. good. And yeah, I think big picture, as I expected, not too many surprises, in my opinion. I think it's a super healthy company. I always say that definitely the most profitable EV maker in the world. The Chinese cheats a little bit sometimes on the accounting. And, they're just investing heavily into R&D, which basically, in my opinion, means AI and Optimus. AI, including robotaxi. And that's all very healthy. I like to see that. And I think we will have another 2 quarters or something where it's, just chugging along before we see any kind of inflection. That was always my bet. In May, June next year is the robotaxi inflection, where this starts to add really to cash flow. I think in my base case scenario, where we hit like over 1,500 robotaxis, that's my estimate still. And as long as that's the case, as long as robotaxi doesn't scale, we're just chugging along, right? We are selling some cars. I think Europe will look much better the next quarter. China is looking good. US is probably going to look weak.
And I go back to just like a big picture on the financials. It still is perplexing why the PE or earnings per share is so down. But, as Jeff Bezos used to say, the ultimate financial measure is free cash flow. And that's up, 46%?
I agree. And Herbert, if you could go to page 25, that's where I find most of my answers in that middle block. So these are the cash flows.
Yeah. Rev
page
up 12%,
table.
Free cash flow 46%, energy revenue up 44%.
The net cash used in investing activity. So that's the second block. That's where there is 4 billion more of purchases of investment, and that's where there is about 2.5 billion more from what I don't know. CERN is not here, but proceeds from maturities of investments means. So is that just maturing bonds that now came in?
Yeah, those are rollovers.
So that gives me this whole difference. You see the top block. So that's the extra money. So it's not the inventory drop.
Yeah, it is. It absolutely is the inventory drop.
Where do you see that? Because this is the cash flow table.
This is cash flow from investing activities. Go to the top and look at the cash
the
flow
operating activities.
Yeah.
And those numbers there is no number that has significantly changed in except for changes in operating assets and liability.
Okay, there's a big increase in depreciation, a big increase in stock-based compensation. They could be hitting it too. Maybe. Anyway.
Changes in operating assets and liabilities, $2 billion. That's the number right there. It's exactly what I said. Q3 2025, the last item before the 6 billion it was negative 673 last year. It's positive 2 billion this year. 2.6 billion swing on inventory. Changes in operating assets and liabilities. That's it. Statement of cash flow. If you take that 2.6 billion out of 6.2 billion, you're down to 3.6 billion, which is still higher, I admit, but it's not 6.2 billion or anything like it. It has nothing to do with the cash from investing in activities. All of that money, 6.2 billion, flows into the purchases of investments, and all of that money plus the proceeds flow into the purchasing of investments. The capital expenditures come out of it. The capital expenditures remaining very consistent. So they actually had $1 billion of additional cash out of operating activities than they had last. Well, actually more. They had quite a bit more.
So getting back to the forward outlook, he did say 2026 would be epic and 2027 would be ridiculous. And that was, I think, 2 earnings calls ago, maybe 3. Does this set us up for that? Like, they're investing a lot in AI and robotics, etc., and they're still pulling in $4 billion in free cash flow. Pretty impressive.
Yeah, I think any concentration in cash flow has to have an asterisk on it. And, I think that's very important to consider.
Well, I think the big picture is we are on track. That's always how I look at it. Is there any kind of tail risk on cash or anything? And the answer is absolutely not. They're sitting on an enormous cash pile of 41 billion. They're spending 1.6 billion in R&D per quarter, but are cash flow positive, massively cash flow positive. So I think the big picture, I also believe Elon thinks like that, is we need to know where we want to go. Do we have line of sight to the inflection points, to mass production of Optimus and to mass deployment of Robotaxi? Line of sight means, is there any reasonable, deeply understood path? And I think there is, from a Tesla perspective. That means like something between 6 months and 24 months for both. And there is just no risk here of any sort on the cash flow side for this. Obviously, not even remotely close. And I think everything else is noise. Like even if there's a bad quarter and the stock dives, I don't think Elon cares about it all about that.
And they said before,
100%, 100% agree.
Yeah, they said before they're sacrificing near-term profitability for long-term AI, robotics, FSD. So
we also have to always understand who they're competing against. Let's take Waymo out of the picture. This Google, I don't think there's any robotaxi real competition. But on Optimus, it's Figure One, it's what's the name, 1X Technologies with a Norwegian robot, and it's Apptronic and people like that. Look at how much money they have, how much money they raise, how much money they spend. And they're up against a $41 billion cash pile with Elon on top that makes even more money every single quarter and can easily spend these 1.6 billion a quarter, like let that sink in, on R&D, which is more and more, I think probably over 50% must be Optimus at this point. And then just compare the numbers. So even if Tesla would be 10 times dumber than the other people, they would still win because they can spend 10 times more. Now, I would add to that, they're probably not 10 times dumber. They're probably 2 times smarter. And then that's how I quantify the advantage of Tesla in this R&D race. It's just completely massive.
There is danger on the horizon. General Motors announced today that they're going to launch their automated driving system in 2028.
It's very dangerous. Once Mary comes into the picture, goodbye, Tesla.
Yeah, Mary Barra, you led, and it matters. The most famous lines from 2021?
Yeah.
Oh, biggest joke.
Yeah.
So, yeah.
Did you see on page 8 that the lithium production starts next quarter? On the bottom of page 8.
Yes.
Battery, PowerPoint, and manufacturing. We expect our lithium refinery in Texas to begin production in Q4 25 and our LFP lines in Nevada to begin production in Q1 26.
Oh, Jeff was looking for that information, LFP. He believes it's very important.
Yeah, we discussed it on his show, and yeah, he definitely focused on that.
Now that Jeff isn't here, he's missing the...
Oh, he's here, he's back.
Okay.
Back in action. He heard the keywords.
Yeah, it's good. I mean, it's not going to do anything for the earnings report, but I think what people should be aware of is you either make it here, you either have enough inventory that you piled in prior to the larger tariffs going on, or you're screwed. So Tesla has chosen this path. I want to see them do more in terms of capacity, but this is a good sign. It's going to take a while, though. It's not going to start production. These factories take a good amount of time to get to their peak run rate. So this is a good sign. But they've actually got to accelerate it. But at least Tesla has a path with their own production, which is good. This knocks out another margin node in the biggest cost center of producing energy and vehicles that may use this in the future.
And why is there no comment about the Megapack factories, and specifically the Houston one?
End of 2026.
Megapack 3 production will begin at Mega Factory Houston in 2026 with up to 50 gigawatt per hour of manufacturing capacity.
Okay, so it's the next page.
Page
Gotcha.
9, end of the second paragraph.
Okay.
Achieved the
2026.
highest quarterly energy storage deployments. Gross profit increased sequentially and year over year to a record 1.1 billion. So
Okay.
we have 90 gigawatt per year between the two factories here.
All right, so we've got it's about an hour from now. We will watch the actual earnings call. They will live stream it. We'll show it here directly. We can right now talk about that. I guess what we're expecting there. We've got the final questions that's been that they will be asking. So based on what you guys saw there, what kind of questions would you guys want to be asking if you had the opportunity to ask them? This is the list here of the 7 questions, I think it is. 1, 2, 3, 4, 5, 6. 6 questions that they will ask. What are the latest robotaxi metrics? And when will safety jars be removed? What are the obstacles still preventing unsupervised FSD from being deployed to customer vehicles? Fleet size, cumulative miles, ride complete, intervention rates. Do you think that they will share that info?
Not exactly. I think they're going to share relative progress and maybe some key milestones they're going after. This market fascination with, and I know there are people on the panel can disagree with me, but you really have to look at a line graph of volume of how many of these robo-taxis are going to get on the road and how many rides can they do. And this imaginary limiting factor of paying somebody $30 an hour to populate what you would have already had to populate anything already from a regulatory perspective, viewing it as anything that's actually gating volume, we're not there yet. And it's not going to get, to me, it's part of the process to get the volume. When I look at the requisitions, I look at the number of cities, I look at the volume in the area of expansion. I think Tesla's right now in this transition of going from this version 13 to 14 FSD. And when they stabilize that, and now it's out for broad release to vehicles now, the question to ask is this release, are there a set of changes and small adjustments where this release gets us to unsupervised? That's the question. And then this whole thing about the safety monitor, I mean, so there's different regulatory requirements by city and by state. So some are going to have it, some don't. A year from now, you're going to look back on the financials, you're going to say, what was that? We don't even see it. It's so small. So I don't get the fascination, other than if people are just using it as a proxy for maturity. That's fine. To me, it's a very gross proxy to use. They're going to ramp and scale robo-taxis with monitors as long as they need to, and they're going to get through regulatory with them. We really need to see if version 14 can go unsupervised.
I think the safety monitors are very important, but for irrational reasons, to Jeff's point. I think it's just a perception thing. I mean, most people, institutional investors and analysts, they're not that deep into that stuff. They just say, wow, how is it self-driving if there's a human sitting there? And then you take some out, and even if you are just in one subsection of one city do it, it's just proof for the, for the person who doesn't know too much. It's like, whoa, there's no person in the car anymore. So it seems possible. I think that's all there is, but that might be very important for the stock, not for Tesla.
Yeah. This is going to be the first system that can actually go to volume production. Everything else has been a prototype experiment that people are trying to force into production, most failing. Some have the perception of succeeding, but they're not real production solutions that have a green or a balance sheet that could ever get into the black. So I look at it now and okay, it's what the stock has moved 1% from the earnings print. That to me, that's like par for. It's nothing. It's basically flat. Tesla reacts based on what they say on the earnings call and what Elon says on the earnings call. And I know there's people that says, his mood doesn't matter. His mood absolutely matters. It's not so much as it's how the information is delivered and what are the risks, what are the opportunities. On a past couple of calls, to me, they kind of, they leaned really heavily into risks in areas that, quite frankly, haven't materialized. If you look at the calls from even a year ago, we're not going to have any more COGS reductions. We're clearly having more COGS reductions. We're clearly doing that. So it'll be interesting to see how they've already made statements in the earnings release about the unpredictability, what's going on with tariffs, what's going on with this and that. And I think most companies are doing that. It's just going to be interesting to see how they see this transition again from a hardware bending metal business to an autonomy AI driven business.
I also see it very positively, what some people see critically, that Tesla is so disciplined and not crazy about too many totally new models, automotive models, right? Because what that does for a company that is pretty strong in development, I don't think they're standing still on automotive, but there are things like improving production efficiency where you can focus on. If you actually freeze these Model Y, Model 3 platforms, and from there just optimize them, that will pay off in margins over time. And I think a lot of people see the car industry too emotional. They are consumers and they say, oh, where are all the new models? I want to see new models. But as shareholders, we should care about both sides of the equation. You want demand and people buying these cars, but you want to make money too. And when you look at EVs and more also at ICE, they're not making money and you can't run a company with that. I think for Tesla, this is the bootloader. That's the basis for getting to Optimus and Robotaxi. And that basis needs to be profitable and stable. And I think that's what it is, plus growing slightly, plus growing a lot on energy. That's all we want to see because basically it's a giant cheat code for the biggest startup in the world. Like this is a startup with 41 billion on the balance sheet, with continuously making more money with a giant cash engine, cars and energy, but that's not the point of the business. The point of the business is get the first humanoid robot to scale fast and get robotaxi and autonomy to scale. That's what Tesla is all about, but they're sitting on this giant infrastructure of cash production plus a giant cash pile. That's all I need to see. So I'm strategically very happy with these things. And now it boils down to these two big ones, Robotaxi and Optimus. Is this a 3, 4, 5 year operation or is it a 6 months, 12 months operation to some scale on inflection? And I believe more and more it's a 6 to 12 months operation.
I think Joe's right on the money.
And then
money.
In contrast, which is interesting because we had the breaking news today as well of Volkswagen having a $12.7 billion cash flow gap.
Oh, really?
Well, Tesla's banking $4 billion a quarter and Volkswagen has $13 billion shortfall.
Did they report today?
Not report, it's more of a warning. They are out of chips and they have to stop production of the Tiguan and some other vehicles. And a whole bunch of other
chips
problems.
or out of cards?
Chips.
Too many cars. That's the thing. If something happens in auto, you have these companies sitting on these inventory. Tesla is almost basically the 10 days is no inventory. That's the stuff that's on cargo, leaving factories and going to the endpoint destination. They actually don't have enough inventory with the 10 days. That's an all-time record, not only for Tesla. I think anybody. This is like you're actually out of production. You can't produce for months, but they're not. They can, and it's that controlled. It's that efficient. So I think it obviously helped with the $4 billion in free cash. It ain't all of it. You can just do the math on their sales and what that is. It's not all of it. So, and again, the US, the $7,500 credit's a US thing. The 10 days of inventory is a global thing. So they're really doing something here. They're really doing a number on inventory. So I mean that would be, if I was an analyst, that'd be a very interesting question. Why did you do what you did with inventory globally, and what does that mean for are you preparing for a transition in vehicles? What are you preparing for?
Well,
But I agree with Joe. I think they're set up well for this autonomy future between wheels and bipedal robots.
but Alexandra used to do this chart of Tesla versus the other top companies in terms of their rating, their credit rating, and all the metrics on the credit rating. You do it now, it would just be ridiculous. Of course, NVIDIA is ridiculous as well. But I mean, if I was just looking at the cash components of this balance sheet and looking at it, how it's building up, I mean, Joe was talking about that a minute ago. It's just incredible. Now, a lot of that cash is going to be eaten up by building bots and building, cybercabs and robotaxi for the robotaxis, and building other cars for the robotaxis. And I think that's what it's all about. But man, it's building up at a very, very dramatic rate. Of course, it'll be drawn down. I mean, I don't think they'll have a positive cash flow next quarter, but wow, what a quarter. And if you just look at the history of their cash flow, it's very impressive.
And it's even the interesting thing is when you model it out, the cash requirements in CapEx for these two fleets, right? If assuming Optimus is also going to be a fleet that is being built and owned by Tesla, which I'm not totally sure, but I'm pretty sure on the robotaxi, that's not even a lot of CapEx, because I think they can produce these things at scale for 15 to 20,000, at scale probably for 15,000. And they're going to make, in my calculation, over 30,000 in margin per robotaxi per year. So, that's totally nuts when you think about it.
What's actually surprising to me is this quarter, we didn't hear anything about these layoffs, right? And the two major lines they call for the profitability is an increase in operating expenses driven by SG&A and an increase in SBC and restructuring and other charges. And if you look at them, they are close to 250 million. If you would reintegrate this 250 million, which I just assume are layoffs, I mean, I don't know what it is, but it sounds like layoffs, then we would be at 0.60 earnings per share. So that's probably, because I mean, I've been looking through these pages now like a crazy mouse running around, and that's the only place where I find something unexpectedly high.
But even the R&D, I mean, the R&D differential within the last year, the 600 million there in additional R&D spend over Q3 2024, that alone, if you would take that out, brings the EPS adjusted to 62 cents. I'm just saying, like, if analysts complain, oh, we thought it's 54 cents, but it came out at 50, well, just the R&D added expense, if you would offset that, it's 62 cents. So in a way, they're complaining about too much R&D spend, plus what you just said, Alexandra. So I don't think people are too concerned about the EPS.
Yeah. And the math is a cool little chart here on the impact of that cash flow, if you can flash that up, Herbert. Here's the green thing. But I do believe the increase in free cash flow is because, as Jeff said, they blew out their inventory, which equates to about 2.3 billion. So without blowing out the inventory, and by the way, comparing that to the previous quarter a year ago, they were at 19 days of inventory, and now they're at 10. So the delta isn't too much. But again, that 4 billion is pretty astounding. Jeff, 19 days versus 10 days. It's a 47% reduction. How huge is that in the scheme of things?
Like I said, you don't want it too low, because then now you start impacting sellout velocity, and there's metrics that people that produce product use, stock out percent metrics, where you start looking at all the locations you sell product and the ability to service a consumer and get them a product, the same day or very close to that. and you don't want a high stock out percentage. And 10 days of inventory, this would be so you have to be calibrated within their supply chain to know, does 10 days have a huge stock out potential or not. Every supply chain is different, but this seems pretty low. It says most of this is X factory, so this is 10 days leaving the factory. This isn't just pure channel. That means that actual transit time on a train or on a truck is included in that 10 days. So they really don't have a lot of inventory. So I'm assuming October was a big production month to start refilling that.
And the flip side of that is basically a working capital release. To
Correct.
pull off Q4, do they have to beef up working capital again, and can it have the opposite effect?
Well, they've got to beef up production, so I would expect Q4 production to be higher, but obviously that's going to be where do they see deliveries coming in at. So we'll have to keep an eye on the factories, keep an eye on any of the intel on VINs and so forth. But again, that's the auto. We have to hear what they say in terms of guidance of the auto business. I think what's going to move. Why does Tesla have a PE, in the 200s? It's not, in GM's at 10. It's not because of the auto business. So that's where most of this call needs to be Robotaxi Optimus, because that's what defines the PE of the company. The other companies that produce cars don't have that. They have nothing to talk about on these calls besides producing cars. And Tesla's going to talk about how they're producing robots of all forms.
Let's get to the second. Go ahead.
Sorry, I think that is the fundamental challenge, without criticizing our Wall Street colleagues too much, that they're not that dumb and they understand this at this point, but they can't do anything about it because they can't start modeling before they have firm timelines. So I don't even think at this point it's too much of a lack of understanding by Dan Ives or Adam Jonas or whoever, but they just sit there and can't do anything because they just don't know when that starting point is for Robotaxi and for Optimus. And I think that's our opportunity. That's the alpha opportunity, because we can already triangulate. It's not too far out. And at the moment where it becomes real, they can start putting it all in. And I think, that's exactly the alpha. You want to be in Tesla in a reasonably close time frame when that inflection point happens. When Wall Street is being forced, that's always what I mean with forcing function. When they're being forced to put it into the models. And I don't even think you need to force them too much at this point. Herbert, we had discussed in one show that Dan Ives said that this ratio flipped, that 70% or something of institutions actually want it now. They are expecting it, they understand it, they're just waiting for that point. And I think that's very powerful. So it's all about, I think we are at the frontier, we are the avant-garde, we have to figure it out. We have to figure out when these inflection points are, which is very exciting.
Yeah. Okay, so with the very first question the retail investors asking Tesla to answer at earnings call was about Robotaxi. The second question is about energy, and it's not till the third question we get to auto again, which is great news. So this is the second question. What is the demand and backlog for Megapack, Powerwall, solar, or energy storage systems? With the current AI boom, is Tesla planning to supply power to other hyperscalers? Thoughts on this question?
Well, we'll be able to see the backlog to a degree in the 10Q. We actually saw in the 10Q last quarter that the backlog had declined, and we didn't know what that was about. We didn't get a chance to ask that question. So the real question is, has the backlog increased again this quarter, or has it declined again this quarter? I think that's the bigger question I would ask. So that's something that really intrigues me, and I'd have to wait for the 10Q for that. I'm not sure they'll answer that question online.
Well, when it comes to Megapack and Mega Block, I had always a hard time understanding that business. So I decided, I think a month ago, to dive deeper into it and try to understand it. And what was super revealing for me is when I understood what this is all about, that batteries, utility scale batteries, which is Tesla's battery business, that is actually a thing that is of fundamental strategic importance for the United States and can be deployed or has to be deployed on a very massive scale that I wasn't aware of before, because of the AI boom and the huge surge in energy demand. The United States isn't even in a position to build enough power plants in time to meet that demand. It's a giant strategic problem. And what batteries do is that they can increase peak capacity. They can basically replace, to some extent, to a big extent, the need for building new power plants. Because if you have base load and peak load and have your infrastructure, your power plants, and then all the wiring and everything you need, the grid, the batteries, if they are at the end point or closer to the actual use localization, they allow you to store that energy and release it at peak, which effectively means you can increase your peak supply.
Okay, next lesson, go check out AutoBidder. Then you'll be really...
I know, they're mega, exactly. So basically Tesla has the infrastructure, both the hardware and the AI AutoBidder stuff, to actually manage these demand peaks and everything. And for me, what was so revealing is that has nothing to do with renewables, by the way. Renewables is just another great use case, but that's even needed for coal and nuclear and everything, for the whole load of the entire grid.
Gas turbines, everything.
Yeah, for everything. It's just a complete source agnostic energy peak booster, the whole thing.
But how much is it? How much is it, Joe? I mean, so you have an AI data warehouse. You got Colossus, you got Cortex. I think I read something like 183 megapacks. Is that enough to move the needle?
Well, everybody else has to build their data centers.
That's just for one data center, Herbert.
Yeah, that's what I'm asking you guys. Is it a big deal with the AI boom? Is Tesla planning? Yeah.
So
gigantic,
it's a gigantic deal because it has nothing to do with any specific thing, not with data centers, not with renewables. It has something to do with building out the entire US energy grid, because this is about peak demand problems. So if you have more energy demand in any town or something, you build a data center, then the whole town has a problem and the data center. So this is about basically ramping up the capacity of the entire energy grid of the United States. And we're talking about many terawatts of storage need, terawatt hour storage.
And it's also a fine tuning of allocation of Tesla's resources, because as you just saw, in energy, we're making 31% margin. In cars, we're making a little less than 14%. So it's from simple to double. But the car will have all these service revenues coming, right? So you have to really think strategic in where do you allocate your batteries, because that's the rarity in the whole game, right? Do you allocate them to the battery business where you have a stable, well, we thought 25, but we obviously seem to be now above 30%, or do you allocate it to the car business which needs much more servicing, and there's just so much more to a business model of selling cars, but the income from AI on the car is so much higher than what you'll ever make on the energy business. So that's a question I asked Elon 3 years ago in my first shareholder meeting.
I remember that. Yes.
But I think the key on the demand side, so what Alexandra is referring to is the supply side, like where do we focus which demand do we service, which is a great question. But I think the takeaway on energy is there is no limit to the demand, in my opinion. Yeah. This is just completely supply constrained.
Well, yeah, there's a supply constraint, and actually quite a lot of levels to that supply constraint. So they are building a third factory, and they speak about that, but they're constrained as to the constraints are not only batteries, but there are other constraints as well. And so I think the size of that business is relatively. I think it'll never be anything like the size of the auto industry business coupled with the robotaxi business. So I think, but it will be a reasonably significant business, and I think it's going to continue growing at 20%, 25%, maybe even 30% per year.
There's a supply demand dynamic that is also putting a lot of demand pressure on this, which is as supply of energy becomes scarce, the cost of the energy is going to go up. And batteries relative to the cost of the data center is a relatively cheap solution to increase your total output power and to have it be there reliably. So this is like gold. And I don't think it's widely understood yet in the market. Right now, the market is still drunk on GPUs, NVIDIA, AMD. It's starting, and then all of a sudden it started getting drunk on nuclear. And then, but this thing in the middle, it's not widely understood yet, but it's going to be soon, because as these data centers start going up, all of a sudden you're going to start seeing issues with power in areas that you may not have seen before, or they're going to delay those things being permitted, which would also be another problem. So this battery storage business is huge. We've been talking about it for 2 years, but I think this reality of what's happening with AI data centers is really, it's going to put it in a different stratosphere, in my opinion. Question is what I love that question in the earnings. For the earnings, I wish they would have said, what non-Tesla megapack business do you have for data center? What agreements are there any agreements that are beyond, that are non-Tesla, non-XAI? That would have been interesting.
Yeah, it would be interesting. I think Tesla might get into the data center business itself, like AI data centers, the whole shebang, and then either leasing, storage or space or server space, or actually building it for others, right?
Well, I got two questions. One of the concerns I have is data centers. They're such easy targets. So to eliminate a data center doesn't take much. One drone, one bomb, go through the roof, blow them all up. Should data centers go underground with boring tunnel? First question. And the second question, I got the panel here, is regarding one of the key points of this whole earnings report is the first production lines for Optimus are being installed in anticipation of volume production. Jeff, walk us through what that means. Does that mean one little line that'll kick out 10 a month, or volume production, is that thousands? Help us understand that.
Yeah, a volume production line is many thousands. Like I said, a typical smartphone line should be able to do 1 million units a year at greater than 80% utilization, up to, depending on this metric called units per hour, UPH, and how the line is designed and configured, it could be up to 2 million units a year. Now we need to see what is that process time for Optimus, what is the line rate that they're anticipating. I believe it's going to be much faster than building a vehicle. And so, yeah, a volume production line is that we're out of the, can we produce a couple of hundred of these things? There's a line for that too. They've talked about that line as well. So they're going to have to do both. To me, this signals that there's not a version 4 Optimus that's needed for volume production. They're going to go work on a version 4, I'm sure, for follow-on years. And that every year they're going to iterate and update Optimus and make major updates, just like they do to the Model Y. But what this tells me, this is the difference than version 2 Optimus. Version 2 Optimus, they looked at it and said, we're not building a volume line for this thing. We have to get to a version 3. And here are all the changes. Now, to me, the difference here is they looked at version 3 and they said, this is something that we can put into production and build, many, tens of thousands, hundreds, maybe hundreds of thousands. We'll see. I think the first year it's kind of a tens of thousands of thing. And then, and then it could go to hundreds of thousands and then millions. But I think that'll also be a new rev of Optimus as well. So volume production line is thousands of units. For sure. Many thousands.
Joe, didn't you uncover somewhere orders for about 70,000 units?
Yeah, it was interesting. I covered it in a video, I think last week. There was Chinese leaks. That's where AI comes into the game. I translated the page, read a little weird if it translates Chinese, but there was basically an industrial trade publication where they leaked, I think, 5 different vendors where contracts with Tesla leaked, and they were all coming in between 70,000 and 250,000 in total volume Optimus production contracts, and they were all instructed to be ready for next year, or paid to be ready next year. So I think that's pretty still rumors, right? We don't see the actual contracts, but that was, Chinese leak. It was about the actuators. It was about all kinds of other components that go into Optimus. I think that's another data point, right? So we see it in the earnings report now that Tesla says they're preparing for the lines, and then we hear on the Chinese side, the supplier are leaking. So clearly something is going on.
Yeah.
In the
Well, yeah, you
10th of
can inextricably connect those two. If they say they're installing a volume production line, there's orders on CapEx suppliers to make parts for that line. And the kind of lead times there are for these actuators and things that actually go in the Optimus would tell you that they would need to start the staging of orders. Orders come in different stages. The first thing you tell a supplier is you give them a letter of intent. You say, I'm going to work with you. And if you meet these requirements, we're going to go to production. The next thing is, if you meet these requirements, you go into production, I'm going to reserve capacity for you, meaning I want this floor space. I want you to go out and order the CapEx to make my part. The final thing you tell them is you drop an order on them and say, you reserve the capacity. We said we're going to work together. You install the capacity. You're making the parts the way I want them. Now I'm going to drop an order on your head. So we don't know what these Chinese leaks are saying, but if you just go to the earnings report and say Tesla says I'm going to install a production line, you can infer that they're putting orders for CapEx and they're putting orders on suppliers for parts. Absolutely.
Yeah, and it was pretty believable because they even had redundancies. So different suppliers that do the same thing, and they did contracts with both on the actuator side, I think. So it was pretty, I think something is going on there. Oh, we have Cernbird. Herbert, did you hear about the
Cernbird was evil.
your long lost cousin or brother, Cernbird?
We had some
Hey,
fun
Cernbird.
while you were away.
I saw Cern.
Sunbird did as well. Sunbird did this so well.
He did
And
incredible.
I'm wearing
Thank you,
green
Cern.
today, Alexandra, in honor
Me
of.
too.
Yeah.
Yeah, we got the memo. I mean, talk about
Yep.
the others, but
And,
Dark green, though. It's close to black, but it's dark green.
and before we jump
I
into
was more
Stern,
hopeful.
before we jump into Stern's most amazing slides, I do have one last question for the panel here regarding Optimus, because this is the $10 trillion question. So you able to flash that up, Herbert? The deck. So these are the questions that I ask myself and assign probabilities. And I'd love to go a quick round the table. Is any of this even possible? One, reaches limited production, factories, internal use next year or latest 2027. I assign 85% probability. Human level dexterity for the hand, very important, and AI for broad tasks, 50%. Again, by 2028, in-home and commercial. Scales to billions of units, dominating global labor, no, very small probability and long way off. And finally, it becomes the biggest product ever. Elon said that, 10x impact, 10x bigger than the iPhone, 30% chance. I'd love for the panel to throw some mud at this or some light. Is any of this even achievable? And what probabilities would you assign to these? And am I missing any topics?
For me, it's a matter of time frame, James.
Yeah.
Your probabilities, I think, for the first two seem reasonable to me. Human level dexterity. I mean, there's degrees of that, I suppose, right? Can it play the piano as well as a concert pianist? Probably not. But eventually. And then the other two, the last two, it's just a matter of time.
So you're super bullish, sir.
Yeah. Long term, Optimus is the value of Tesla. It's 90% of the value of the company will be from Optimus.
That's right. As Elon says that, and our models have said that as well for years now. So 10x impact. Joe, what do you reckon?
I would put a 95% probability on your first one because you include 2027.
Yep.
I think it's just absolutely a given. They have to, number one, because of the competition that actually exists there, and second, they will. Then achieves human level dexterity here. For the other three, I would be more critical, not of the percentages, but of the questions. Like, are they really that important, right? For me, the most important question, the first one is very important, And the next important question is, when do they hit 1 million bots in sales? And then you can choose your year, 2030 or something. What are the odds? I think the odds are pretty high for 2030 to hit 1 million.
Because I get the feeling Elon doesn't want to build extreme scale until he gets that human level dexterity. He spoke about threading a needle and playing the piano. That's his goal, and he doesn't rest till he achieves his goal. This is what's nagging at me.
Yeah, I think I'm not against. So I'm not saying this is not going to happen. I just don't feel it's a metric I would look at. So I think if you ask me, will they achieve human level dexterity by 2028? I would say by 2030, I would give it a higher probability, 70, 80%. Because I always view these things as exponential trajectories, right? So I'm not sure about the 50% 2028, but I would put an 80% 2030 on it.
Good.
Because this is one last comment on this whole thing, why I'm so bullish on both Robotaxi and Optimus, is because people underestimate the exponential trajectory of AGI or AI, whatever you call it, like AI. And this whole thing has enormous impact on all R&D activity in that space. Just think about what these engineers do all day long, right? They have to simulate and CAD and math their way through it. And now you suddenly have these models that do that 10x or 100x their productivity. And these models improve every 3 months dramatically. So that totally changes these trajectories. And that's why I'm exponentially more bullish with every year out.
So we're trying to get at here, at least what I'm trying to get at, is for the investors. I had dinner with an AI expert last night in San Francisco, and they basically said, Tesla's not ready. They're 5 years out before they'll have anything at scale, before anything will work, or before anything will generate any meaningful revenue. So somebody steelman me on that. How wrong are they? I believe they're very wrong. I know CERN believes they're very wrong too.
Well, I think it's pretty simple. There's a lot of value in just moving stuff around. You don't need human level dexterity to move stuff around, right? There's a lot of companies that have massive turnover in their stuff. Think about Walmart. I think they have something like 40% turnover every year. Look at the costs that they must have, right? And just finding people, hiring them, training them. These companies are going to be begging Tesla to sell Optimus to them just to move stuff around. So
Also,
there's a huge market without getting to the point that we're talking about here.
I'm totally with CERN. I'm going to call you now CERN, not CERNbert anymore, because we have Herbert. That's like, we have to respect the original Herbert. But that's why I don't like this metric. Like, when I think about it, if you achieve 80% human level dexterity, whatever, like some significant thing, but still significantly off, you already have humanoids that are multiples more valuable than human labor, because you just don't need it, and then they can work day and night and be stronger, whatever, faster, all kinds of things. So who cares about, I know Elon likes it probably, but I don't care about that too much. I think once you reach 80%, let's just say some random number above 50%, human level dexterity, and the rest makes a lot of progress, these humanoids will already be vastly more valuable than human workers for many blue collar tasks, which I care about. I mean, that's the economic value.
Yep.
Okay, thank you so much, James. That was fantastic. You bring up incredible thoughts here. That was great to go through that. That is important. We'll see to what extent we'll hear any answers to that at the earnings call. CERN, you have slides you want to share with us as well. We are going to switch over to the actual live stream, which should start in about 15 minutes from now. So we got 15 more minutes pre-show.
Yeah, I've got a few quick observations. You guys did a great job, I think, of covering the slide deck on the fly and live, and that's very difficult. I had the pleasure of being able to sit with my spreadsheets for a little bit. So the first thing I noticed was that Tesla has now crossed $500 billion in cumulative revenue. That's a pretty nice milestone.
It's big.
Now, that's going to seem like a tiny number in the not too distant future, but for now, let's enjoy that. $500 billion of total lifetime revenue for the company. Okay. And then the other thing too, on the mystery of, why are the earnings kind of so weak? Well, if you remember back in Q4 of 2021, it's highlighted there in orange. The SG&A expenses were huge because that was related to Elon exercising stock options. I suspect that this time that the SG&A is so high relating to his compensation in some way.
Yeah, there was an increase in stock-based compensation in the financials.
That was exactly my thought. I was thinking, is it the 96 million stock allocation? So, but then I went back. I was, not very present in the discussion because I was going back. That one is issued only in a year. It's not issued now. They gave him the voting rights, but I was also wondering whether they, whether they somehow accounted for it. And when you go, I think it's page 25. Sorry about that. I was in there trying to put stuff together.
And I think we'll learn more in the 10Q tomorrow when it comes out tomorrow morning.
So you may be right. It may be those 96 million shares.
It's something. It doesn't add up otherwise to me.
Well, it's obviously a GAAP thing because it's not in the non-GAAP. So we're back to our subject, whether we should use GAAP or not. And it is something that was unexpected. So I was, we didn't hear about redundancy. Whenever Tesla lays off people, it's not the season anyway. It's usually in February. Then you hear about it. So I don't think it was a lot of, letting people go. The only exceptional event is this 96 million shares issued. So if that is it, everybody calm down because that's ridiculous. That is just an accounting expense. There is no cash expense linked to it, and it may actually be reversed as soon as we have the verdict in Delaware if it is in our favor.
So if we back that out, I wonder what would OPEX be?
Well, more than 60.
That'd be a great question for the earnings call.
Yeah.
Yeah. Hopefully that's discussed. So hopefully they talk about it, or an analyst asked about it or something. So anyway, that's a little mystery, I guess, to be resolved. But I think there's some explanation there that makes sense. That final yellow line there looks like too much of a jump to me, just to be something that's run of the mill normal. There's something in there that
without any news. Any news, exactly.
Yeah. And then Herbert, on the next slide, if we look at margins for the different business lines, we've got in blue auto margin without the credits at 15.4%. We've got energy, Alexandra mentioned this, 31.4%, continues to rise. And then we've got services and other, who I left for dead a long time ago, at 10.5%.
Yeah.
So the question there is something fundamental changed? That's a big jump. Or is it going to go back down, next quarter? Is this kind of a temporary thing? Now, we saw a jump last year, and then you can see in Q1 it dropped down again. Sorry, that would be Q4, it dropped down again. So there seems to be a Q3 phenomenon right now in that business line.
Well, I've got some insight on that. So everywhere I go, anytime I pass by a supercharger, half of the vehicles now in California are other vehicles.
So
and
true.
I think all the cars now, I think that's what that is. That's other people juicing up on Tesla chargers.
So if that is, then that'll have some staying power. So that's a promising sign to have, double-digit margins in that business. And then on the next page, Herbert, this is the profitability of a Tesla is now just over $6,100 last quarter, excluding red credits, excluding leases. And I'll get to a breakdown here for Jeff's benefit here towards the end. But now we've seen 2 quarters of improvement in this metric, which is nice. And again, this isn't going to matter in the not so distant future, but for now, people care. On the components of revenue, we've got autos here in red. We've got red credits in blue, and you can almost barely see it now. You've got energy in green and services and other in yellow. And this is the highest quarterly revenue in combination here. And if you go to the next page, if we common size it, looking at percentages, you can see that as the blue shrank, the green and the yellow shares increased, pick up the slack. And we'll see it more in the gross profit numbers in a second. But gross profit for, revenue share of the company for autos is about 73% this quarter. So higher than where it was in Q1. Of course, Q1, we know what happened and why that was low. But the other businesses now are becoming, a decent share. And it's going to be great when we get robotaxi numbers in here at some point. We're going to see a rapid change. And then if we look at gross margins on the next page, you can see it even more here that the regulatory credits, the revenue basically is the gross margin. And so as that has begun to shrink, the energy and services and other are picking up the slack.
So when the question's asked, what's going to happen when regulatory credits go away? First off, they're not fully going away, but as they do, energy is soaking all of that up. It go from 6.5 gigawatt hours deployed to 12.5. There's your answer. It's real. It's not a forward thing too. It's real. It's here.
It looks like to me, Jeff, that quarter over quarter, the increase in services and other gross profit more than made up for any drop in reg credits.
Yeah, that
you can see
too.
it from your chart. Brilliant chart, by the way.
And
Yeah,
then the
this
next one is a common size and percentages. You can see it there maybe a little more clearly for the services and other and how it's growing. And energy as well. The green's getting bigger over time and the blue is getting smaller. The blue is the reg credits. Not too many quarters ago, the services and other, the yellow bars were negative. They were a drag on the company from a gross margin perspective. And then here's gross profit in blue versus the net margins, and then versus the operating margin. So there can be some differences in those two, but this quarter it was pretty close. Not too much to point out there, but improving. And then the next one is the auto gross margins with and without reg credits. Depending on how you'd like to look at that. The gray line is the without the regulatory credits, and that we've seen a 2-quarter improvement now to just about 15%. Okay. And then we've got, this is for Jeff. Jeff, these following 4 charts are for you. The auto average selling price versus the cost to make. So the blue line is the sales price per quarter. The red line is the cost to make. The difference is the profitability, gross margin. And this is excluding reg credits, excluding leases. So as apples to apples as we can get quarter to quarter. The next
This
few
is
pages.
all vehicles, including Cybertruck, X, S, etc.
Yeah, that's right.
$35K average price. Wow.
Yeah. So this is the average selling price of a Tesla quarter to quarter. This quarter, the average selling price actually went up almost $2,000 versus last quarter.
Does that mean some of the models now they're bundling stuff like FSD? Is that helping the package deal?
Probably, yeah. It would all be a part of this number. And, mix shift and all those kinds of things, right? And then if you look at the cost side of things on the next chart, for the last 3 quarters, we've had COGS increases. So they're fighting a little bit of a headwind here, right? As we all know, with tariffs and all the different things that they've had to deal with, right? But that being said, the profitability this quarter, anyway, on the next page is up about $1,000 per vehicle after suffering 3 quarters of some pretty big declines.
Yeah. So if profitability for a vehicle is up and COGS are up, that means the COGS thing may be more of a mix of what versions they're building and less of a. But yeah, and it also shows the tariff piece is pretty well contained.
Yeah. Anyway, those were some quick highlights that I found in the report. I'll have a lot more charts to share in the coming days, but all in all, I was really encouraged, particularly when I look at the fact that we've got so much in cash on the balance sheet, and cash flow was incredibly strong. Of course, massive inventory reduction drives that. A pickup in accounts receivable, which was kind of interesting, but to be expected, particularly with perhaps, a lot of sales at the end of the quarter. But anyway, financially, the company is very strong and running. The operational excellence really shines. I was actually very impressed with this quarter.
Well, we shouldn't forget, I don't want to be a downer, but we shouldn't forget that this quarter definitely looks better on paper than the strategic situation is because of the tax credits, right? There was definitely a huge demand forward pull, which has all kinds of effects on profitability, on everything is better because it's a cliff. So we shouldn't forget about that. I think the cliff is not as big as people make it out to be, but there is a cliff.
Wouldn't you argue on that point, though? Wouldn't you argue as well? There was not only a pull forward, but they flushed all the inventory, Jeff, as well, while they were spinning up the Model 3 affordable and Model Y affordable. So they're still juggling a lot of balls in the quarter, which is very impressive. That they still had that may be part of the COGS hit as well that CERN pointed out. Is that possible?
Yeah, they didn't produce. I mean, the output was from inventory. So if you get, they're actually not gaining production volume efficiencies in this quarter. It's more of on the back end logistics, inventory, and so forth. So I actually think that there's a little bit of an offset here, just because they had a lot of deliveries. They didn't get a lot of efficiencies actually in production because they didn't have a high production output quarter. So I think those things offset a bit. I was looking through this earnings report. I mean, didn't the Department of Commerce approve an MSRP credit for cars built in the United States?
2000.
This is not the tax credit thing. This is the tariff MSRP credit to OEMs. I don't think this has kicked in yet. And I'm wondering if somebody is going to start forecasting. The analysts should start forecasting this, because Tesla will absolutely be a part of it for their U.S. production. There's an MSRP credit coming from the Department of Commerce to U.S. auto manufacturers to basically incentivize them to do final assembly here, which Tesla is already
Can you guys
doing.
hear that?
Yes.
Yeah.
You can hear the music?
Yep.
Yeah.
Okay.
Yeah,
I
thanks,
can
Herbert. I was
lower
in
it.
the middle of talking.
Sorry, buddy.
Yeah.
It's okay.
And Jeff,
Well,
to your point, something people maybe also don't have totally on the radar for energy. There's this crazy, I don't know if that fully applies, if anyone is an expert here on this, but the Biden Inflation Reduction Act, Inflation Acceleration Act, has this, a base credit for large storage projects, standalone battery storage, where you get 30% of eligible project costs in credits. That's like pretty huge for all of the utility scale energy if the batteries are produced in the United States. So that has to be local. But if that kicks in, I mean, that's an insane amount of money.
Yeah, I don't know if there's that you're right, that does exist. I don't, that should already be in the balance sheet unless they're not getting credit because their stationary storage cells are LFP cells from China. So it'd be interesting if they're just getting the pack credit only or the module credit only, which would be smaller. But yeah, there's an auto credit on MSRP coming for, or at least for the U.S. market. I just don't hear or see any people talking about it. Look it up, Google it. It's there. Anyway, we're talking about auto. It's okay to talk about auto because it's a huge source of their current revenue and EPS. But obviously, the future is autonomy and bots.
All right, so it's 3 minutes from now. They should go live. We'll turn this on and we'll watch it all live, full screen.
Yes, so far my bet held up on the stock. We are down $7, $7.75 at 431. So I'm totally in the safe zone right now with my little short put strategy. But now we get Elon on the phone, so let's see what Elon does.
Sir, we had a question in the report. I don't know if you saw it. It was on the revenue. It said lower one-time FSD revenue recognition year over year due to Q3 24 release related to Cybertruck and certain features. And then a second piece, lower one-time FSD revenue recognition year over year as described above. We weren't sure what that meant. Were they sandbagging, and will they be recognizing that in Q4 to compensate for other weeknesses?
My understanding is that was a release they did a year ago, and so then the year-over-year comparison makes it more difficult because they didn't have that tailwind this quarter. That's how I read that.
Okay. And anecdotally, by the way, anybody I speak to that has bought a new Tesla, they all bought FSD.
Yeah.
So I think the take rate, which is not mentioned here at all, I know Franz mentioned it subtly with Jay Leno once a few weeks ago, but I think the take rate is really going a lot higher.
That's maybe why saw the average selling price go up by $2,000
Yep.
per vehicle.
Yep.
You know, in the face of higher costs, right? Their margins increased. So that
And
would
that may be
explain
a
it.
surprise. That may be a surprise that's revealed on this call. A big
Yeah.
jump in that.
And that would be a very positive thing.
Anybody here? What would you love to hear at the call? Something that Elon might say or somebody says.
Optimus 30,000 units by the first half of 2026.
Don't get that precise. That would freak me out. But yeah, I mean, it would sound great, but
I
that's
think the
something
big
they could
two
totally
topics
miss.
are, of course, Optimus and also CyberCab, because CyberCab has become kind of the litmus test or the canary in the robotaxi coal mine, right? If you produce CyberCab, it means you are convinced that this thing works at scale commercially.
And it's a two-seater, so there's no safety driver too.
Exactly, that would be weird, but
Yeah.
yeah. There's a dude sitting next to you.
I've heard they might have a joystick though.
Oh yeah,
I'm joking, guys.
exactly.
Brother.
So yeah, I think that's the interesting thing. I'm not too bullish on this whole thing that Elon will pull a rabbit out of the hat. I think he will be in a good mood and he will say we are planning this stuff, but I don't think he will surprise too much with something crazy. I think he will stick to the plan. It's like, yeah, we basically repeat what they're saying in the report.
Did anybody think when I look at the report, the financials that just we just watched or just looked at, it looked like it was pretty muted. They didn't really give a lot of guidance for the future. They didn't say anything about FSD in terms of and robotaxi. Even that they didn't say we're going to be expanding significantly over the next future. Do you guys think that you felt the same way?
Neither muted nor, neither negative nor positive. I would like to understand where this gap of 200-300 million comes from. I still can't make it out. But other than that, I'm happy with the free cash flow. I'm so happy we have now 41.5 billion money available. We need it. And I don't see any need to change my prediction for a positive call.
Yeah, and I think the general sentiment, I think more and more, even with the institutional analysts, is the quiet before the storm, before the AI storm. So everyone says, okay, these two big things are somehow coming. So what do we do in the meantime? Are we going to talk about some auto margin 0.5% change, or are we focusing on that big storm? And I think we're focusing on the storm, and that is why it's a little sentiment driven in the call, right? If everyone gets the feeling, oh, the storm is coming, it's brewing, and they're on it, and we're talking about a 12 months perspective or less, I think then it's a very good call. But if the sentiment is like, ooh, Tesla doesn't even know when the storm is the storm even coming, then it's going to get shaky. But to Alexander's point, I'm confident that it's going to be a positive call.
I always go back to when Jensen was talking about the coming storm for NVIDIA. And in that case, no one believed him, even though he'd been talking about it for years beforehand. And it came during sort of one of the worst times for the company where they had a drop in their gaming revenue. Right. And so the stock sold off massively. And they spent good time on the earnings call talking about how the AI storm was coming. Perhaps James, you might remember that. I think you were highlighting that back then.
Yes.
And I feel like we're seeing a replay of this for Tesla.
Only I would push back a little bit. I think the difference is that this time they are not that ignorant. We have like the analysts. I think this time we have indications that they're not going to do the exact same stupid thing because of Jensen. They went through it. They were stupid. They said, oh my God, the storm was actually coming. And we see all these little indications. So that's why I'm not too... I think directionally, pattern-wise, you're right. This will also happen, but to a lesser extent, because people learn. Even these people learn. Oh, it's 33. What's the? Oh, we are so the screen bit.
Yep, it's 3 minutes after 2:30 Pacific time. They should be started anytime soon.
And that's really surprising. It's been a long time that they're late for the earnings calls. That's strange.
They're trying to get all the optimists under control in the room.
Exactly.
Yeah.
The Optimus locked them out.
Fighting.
It's already game over.
Yeah, let's say that.
What's happened to the stock?
I see 432.
Yeah.
Down
Yeah,
6 or 7.
432, 22.
Which is basically sideways chop. It's
Yeah.
actually gone up a couple of bucks.
Yeah.
Yeah, where was the
am I
hamburger
wrong?
revenue? I didn't see that.
Am I wrong, or has it always been 2:30? I had the feeling it was always 2:00, right? Is it
90 minutes after close.
90 minutes?
It's always
Okay,
been 2:30.
Here's a question for the panel. When will Elon replace the CFO with Optimus?
Oh,
Grok, you mean?
I mean, I was
Rock
screaming
me,
last
doesn't he?
time. I hope that it's a little bit more comprehensible this time.
Well, we have 35,000 people, close to 36,000 watching now with all of our different streams in this
That's
one panel.
crazy.
It's great.
Hello, people. That's a lot of people.
It is. We have so much support. You know, while you were gone, Herbert, they were all telling us how wonderful we are. I mean, now they can't anymore, but over
They
the
can't
last-
anymore. Yeah, Cernbert
Right,
is evil. That guy, that
No, they were telling us how wonderful we are. They were
talking
telling
about
us
he's
how-
going to take over the channel, how much
Yeah.
better he is.
Yeah.
There is one other topic I think we should
Quarter
discuss before they go
2025
live.
Q&A webcast.
Oh,
We're
here
going
we go.
My
live.
name is
Too
Travis
late.
Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q3 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. We urge shareholders to read our definitive proxy statement, which contains important information about the matters to be voted on at the 2025 annual meeting. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. We're at a critical inflection point for Tesla and our strategy going forward as we bring AI into the real world. I think it's important to emphasize that Tesla really is the leader in real world AI. No one can do what we can do with real world AI. I have pretty good insight into AI in general. I think that Tesla has the highest intelligence density of any AI out there in the car, and that is only going to get better. And we're really just at the beginning of scaling at a quite massively full self-driving and robotaxi, and fundamentally changing the nature of transport. I think people just don't quite appreciate the degree to which this will take off. Where it's honestly, it's going to be like a shockwave. So it's a because the cars are all out there. There are millions of cars out there that, with a software update, become full self-driving cars, and we're making a couple million a year. And in fact, with the advent of with what we see now as a clarity on achieving full self-driving, unsupervised full self-driving, I should say, I feel confident in expanding Tesla's production. So that is our intent, to expand as quickly as we can our future production. So I was reticent to do that until we had clarity on achieving unsupervised full self-driving. But at this point, I feel like we've got clarity, and it makes sense to expand production as fast as we reasonably can. We're also making huge making a huge impact on the energy sector with battery storage. So with both the Powerwall and especially with the Megapack, we are dramatically improving the ability to generate more energy from the grid. So let me sort of talk a little bit about that, which is if you look at total U.S. energy capability, for example, there's roughly a terawatt of continuous power available in the U.S., but the average usage over a 24-hour cycle is only half a terawatt because of the big difference between day and night usage. If you buffer the energy with batteries, you can effectively double the energy output of the United States just with batteries, building no incremental power plants. And it's very difficult to build power plants. So they take a long time. There's a lot of permitting, and it's not an industry that's used to moving fast. So we see the potential there for Tesla battery packs to greatly improve the energy output per year for any given grid, US or otherwise. We're also on the cusp of something really tremendous with Optimus, which I think is likely to be, or has potential to be, the biggest product of all time. And it's a difficult project, and it's worth noting that it's not like it's just automatic. I'm unaware of any robot program by Ford or GM or any of our U.S. sort of car companies. People I think maybe think of Tesla as a car company. We mostly make cars and battery packs, but so it's not just like an obvious fall off a log thing to make Optimus, but we do have the ingredients of real world AI and exceptional electrical and mechanical engineering capabilities and the ability to scale production, which I don't think anyone else has all of those ingredients. So yeah, with version 14 of the of self-driving, which you can see the reactions of people online. They're quite amazed. And actually, anyone in the US can get version 14 if they just go and select, I want the advanced software in their car. So if you're listening right now and you'd like to try it out, just go in settings and say, I want the advanced software, and you will get version 14. Yeah, so on the Megapack front, we unveiled Megablock, Megapack 3. We also have exciting plans for Megapack 4. Megapack 4 will incorporate a lot of what is normally in a substation and be able to output at probably 35 kilovolts directly. So this greatly improves our ability to deploy Megapack because it's not dependent on building a substation up through 35 kV for Megapack 4. So that'll be that's the engineering priority for Megapack, and we look forward to unveiling Optimus V3. Probably in Q1. I think it'll be ready for to show off, and that I think is going to be quite remarkable. It won't even seem like a robot. It'll seem like a person in a robot suit, which is kind of how we started off with Optimus. But it'll seem so real that you'll need to poke it, I think, to believe that it's actually a robot. And obviously, the real world intelligence we've developed for the car, most of that transfers to Optimus. So it's a very good starting point. In conclusion, we're excited about the updated mission of Tesla, which is sustainable abundance. So going beyond sustainable energy to say sustainable abundance is the mission, where we believe with Optimus and self-driving that you can actually create a world where there is no poverty, where everyone has access to the finest medical care. Optimus will be an incredible surgeon, for example. And imagine if everyone had access to an incredible surgeon. So I think there's, of course, we need to make sure Optimus is safe and everything, but I do think we're headed for a world of sustainable abundance, and that I'm excited to work with the Tesla team to make that happen.
Great. Thank you very much, Elon. Vaibhav also has some opening remarks.
Thanks, Travis. Q3 was a special quarter at multiple levels. We set new records not just for deliveries and deployments, but also around a range of financial metrics from total revenues, energy gross profit, energy margins to free cash flow. This was the result of continued confidence of our customers in our products and the relentless efforts by the Tesla team. The strength in deliveries was attributed to strong performance across all regions. Greater China and APAC were up sequentially 33% and 29% respectively. North America was up 28%, while EMEA was up 25%. The pace in deliveries was the function of continued excitement around the new Model Y. We had previously talked about 2025 being the year of the Y and have since delivered on that promise with the new Model Y released in Q1, followed by Model Y long wheelbase and performance, and more recently, Standard Y in North America and EMEA. We're now operating a robotaxi in 2 markets, Austin and most Bay Area cities. We've already expanded our coverage area in Austin 3 times since the initial launch and are on pace to continue expanding further. Unlike our competitors, our robotaxi fleet blends in the markets we operate in since they don't have extra sensor sets or peripherals which make them stick out. This is an underappreciated aspect of our current vehicle offerings, which are all designed for autonomous driving. We feel that as people experience the supervised FSD at scale, the demand for our vehicles, like Elon said, would increase significantly. On the FSD adoption front, we've continued to see decent progress. However, note that total paid FSD customer base is still small, around 12% of our current fleet. We're working with regulators in places like China and EMEA to obtain approvals so that we can get FSD in those regions as well. Now, covering a little bit on the financial side, automotive revenues increased 29% sequentially in line with the growth in deliveries. While regulatory credits declined sequentially, we entered into new contracts and continued delivery on previously entered contracts. Our automotive margins, excluding credits, increased marginally from 15% to 15.4%, which was attributed to improvements in material cost and better fixed cost absorption due to higher volumes. The energy storage business continued to deliver with record deployments, gross profit, and margins. As discussed before, this business has a bigger impact from tariffs as measured by percentage of COGS, since currently all cells procured are from China, while we're still working on other alternatives. However, as the ramp of Mega Factory Shanghai is happening, this is helping us avoid tariffs because we are using this factory to supply the non-US demand. Like Elon said, grid scale storage, the only way we can get to electricity fastest is by using storage. The other thing to keep in mind is we are seeing headwinds in this business given the increase in competition and tariffs. The total tariff impacts for Q3 for both businesses was in excess of $400 million, generally split evenly between them. Services and other demonstrated a marked improvement sequentially. This was a function of improvements primarily in our insurance and service center businesses. Note that while small, our robotaxi costs are included within services and other, along with our other businesses like paid supercharging, used car, parts and merchandise sales, etc. Our operating expenses increased sequentially. The largest increase included in restructuring and other related to certain actions undertaken to reduce cost and improve efficiency through convergence of our AI chip design efforts. Additionally, we incurred legal expenses related to proceedings in certain legal cases, as well as incremental costs incurred in preparation for our shareholder meeting. Such costs are recorded within SG&A. Further, our employee-related spend is increasing, especially in R&D, as we have recently granted various performance-based equity awards to employees working on AI initiatives, and therefore such spend will continue to increase going forward. On other income, our other income decreased sequentially, primarily from mark-to-market adjustments on BTC holdings, which was a much smaller gain of $80 million in Q3 versus $284 million in Q2, with the rest of the movement attributable to FX movements in the quarter. Our free cash flow for the quarter was approximately $4 billion, which was yet another record. Our total cash and investments at the end of the quarter were over $41 billion. On the CapEx front, while we are expecting to be around $9 billion for the current year, we're projecting the numbers to increase substantially in 2026 as we prepare the company for the next phase of growth in terms of not just our existing businesses, but our bets around AI initiatives, including Optimus. In conclusion, note that bringing AI into real world is hard, but we have never shied away from doing what is hard. We are extremely excited about the future and are laying down the foundation, the benefits of which will be realized over years to come. I would like to end by thanking the Tesla team, our customers, our investors, and supporters for the continued belief in us.
Thank you very much, Vaibhav. Now let's go to investor questions. From say.com, the first question is, what are the latest robotaxi metrics, fleet size, cumulative miles, rides completed, intervention rates, and when will safety drivers be removed? What are the obstacles still preventing unsupervised FSD from being deployed to customer vehicles?
I'll start off with that, and then Ashok can elaborate. But we are expecting to have no safety drivers in at least large parts of Austin by the end of this year. So within a few months, we expect to have no safety drivers at all, at least in parts of Austin. We're obviously being very cautious about the deployment. So our goal is to be actually paranoid about deployment, because obviously even one accident will be front page headline news worldwide. So it's better for us to take a cautious approach here. But we do expect to have no safety drivers in the car in Austin within a few months. I think that's perhaps the most important data point. And then we do expect to be operating robotaxi in, I think, about 8 to 10 metro areas by the end of the year. It depends on various regulatory approvals. But you can actually, I think most of our regulatory applications are online. You can kind of see them because they're public information. But we expect to be operating in Nevada and Florida and Arizona by the end of the year. Ashok?
Yeah. We continue to operate our fleet in Austin without anyone in the driver's seat. And we have covered more than 250,000 miles with that. And then in the Bay Area, where we still have a person in the driver's seat because of the regulations, we crossed more than 1 million miles. And we continue to see that the fleet, robotaxi fleet, works really well. Customers are really happy, and there's no notable issues. On the customer side, customers have used FSD Supervised for a total of 6 billion miles as of yesterday. So that's like a big milestone. And overall, the safety continues to be very good. And as Elon mentioned, we are on on track to remove the person from inside the car altogether, starting with Austin.
Great. The next question is, what is the demand and backlog for Megapack, Powerwall, solar, or energy storage systems? With the current AI boom, is Tesla planning to supply power to other hyperscalers?
Thanks. Demand for Megapack and Powerwall continues to be really strong into next year. We received very strong positive customer feedback on our Megablock product, which will begin shipping next year out of Houston. And we're seeing remarkable growth in the demand for AI and data center applications as hyperscalers and utilities have seen the versatility of the Megapack product to increase reliability and relieve grid constraints, as Elon was talking about. We've also seen a surge in residential solar demand in the US due to policy changes, which we expect to continue into the first half of 2026 as we introduce the new solar lease product. And we also began production of our Tesla residential solar panel in our Buffalo factory, and we will be shipping that to customers starting Q1. The panel has industry-leading aesthetics and shape performance and demonstrates our continued commitment to US manufacturing.
Great. Thank you, Mike. Unfortunately, the next question is related to future products. This is not the appropriate venue to cover that, so we're going to have to skip it. The question after that is, what are the present challenges in bringing Optimus to market, considering app control software, engineering hardware, training general mobility models, training task-specific models, training voice models, implementing manufacturing, and establishing supply chains?
Yeah, I mean, bringing Optimus to market is an incredibly difficult task. To be clear, it's not like some walk in the park. At some point, I mean, actually, technically, Optimus can walk in the park right now, and we do have Optimus robots that walk around our offices at our engineering headquarters in Palo Alto, California, basically 24 hours a day, 7 days a week. So any visitors that come by, you actually you can stop one of the Optimus robots and ask it to take you somewhere, and it'll literally take you to that meeting room or that location in the building. So I don't want to downplay the difficulty of Optimus. It's an incredibly difficult thing. Especially, it's difficult to create a hand that is as dexterous and capable as the human hand, which is the human hand is an incredible thing. That the more you study the human hand, the more incredible you realize the human hand is, and why you need 4 fingers and a thumb. Why the fingers have certain degrees of freedom. Why the various muscles are of different strengths. The fingers are of different lengths, and it turns out actually that those are all there for a reason. And so making the hand and forearm, because most of the actuator, just like the human hand, the muscles that control your hand are actually primarily in your forearm. The Optimus hand and forearm is an incredibly difficult. I'd say it's more difficult than the rest from an electromechanical standpoint. The forearm and hand is more difficult than the entire rest of the robot. But really, in order to have a useful generalized robot, you do need this. You do need an incredible hand, and then you need the real world AI, and you need to be able to scale up that production to have it be relevant, because it's not relevant if it's just a few hundred robots. But so you need to be able to make Optimus robots at volumes comparable to vehicles, if not significantly higher. So if you're trying to make 1 million or something per year, trying to make 1 million Optimus robots per year, that manufacturing challenge is immense, considering that the supply chain doesn't exist. So with cars, you've got an existing supply chain. With computers, you've got an existing supply chain. With a humanoid robot, there is no supply chain. So in order to manufacture that, Tesla actually has to be very vertically integrated and manufacture very deep into the supply chain, manufacture the parts internally, because there just is no supply chain. So this is the kind of thing where I'm like, if I put myself in the position of a startup trying to make a humanoid robot, I'm like, I don't know how to do it without an immense amount of manufacturing technology. So that's why I think like Tesla's in some almost a unique. I think unique position when you consider manufacturing technology scaling, real world AI, and a truly dexterous hand. Those are generally the things that are missing when you read about other robots, that they just don't have those three things. So I think we can achieve all those things, those three things, with an immense amount of work, and that is the game plan. So my fundamental concern with regard to how much voting control I have at Tesla is, if I go ahead and build this enormous robot army, can I just be ousted at some point in the future? That's my biggest concern. If that is really the only thing I'm trying to address with this. So it's called compensation, but it's not like I'm going to go spend the money. It's just, if we build this robot army, do I have at least a strong influence over that robot army? Not control, but a strong influence. That's what it comes down to in a nutshell. Like, I don't feel comfortable building that robot army if I don't have at least a strong influence.
Great, thank you. We've already covered robotaxi expansion. Unfortunately, the question after that is another future product question, so we're going to have to skip that. The next one, though, is, can you update us on the $16.5 billion Samsung chip deal in Taylor? Given the importance of semiconductors to autonomy in Tesla's AI-driven future, what gives you confidence Samsung can fulfill AI6 at Tesla's timelines and achieve relatively better yields and cost versus TSMC?
Okay, so I'm gonna give quite a long answer to this question because I have to unpack this question and then answer the unpacked version. So first of all, I have nothing but great things to say about Samsung. They're an amazing company, and Samsung, it is worth noting, does manufacture our AI4 computer and does a great job doing that. Now with the AI5, and here's I need to make a point of clarification relative to some comments I've made publicly before, which is we're actually going to focus both TSMC and Samsung initially on AI5. So the AI5 chip design by Tesla is, I think it's an amazing design. I have spent almost every weekend for last few months with the chip design team working on AI5, and I don't hand out praise easily, but I have to say that I think the Tesla chip team is really designing an incredible chip here. This is, by some metrics, the AI5 chip will be 40 times better than the AI4 chip, not 40%, 40 times. Because we have a detailed understanding of the entire software and hardware stack. So we're designing the hardware to address all of the pain points in software. So I don't think there really isn't anyone that's doing this, the entire stack, all the way through real world, calibrating against the real world where you've got cars and robots in real world. That, like, we know what the chip needs to do, and we know what, just as importantly, we know what the chip doesn't need to do. To sort of give you some examples here, with the AI5, we deleted the legacy GPU or the traditional GPU, which is it's in AI4, but AI5 does not have. We just deleted the legacy GPU because it basically is a GPU. So we also deleted the image signal processor. and there's like a long list of deletions that are very important. As a result of these deletions, we can actually fit AI5 in a half reticle, and with good margin for the traces from the memory to the trip, the Tesla trip accelerators, the ARM CPU cores, and the PCI X the PCI blocks. So this is a beautiful chip. I've poured so much life energy into this chip personally, and I'm confident this is going to be a winner, next level. So it makes sense to have both Samsung and TSMC focus on AI5. And so even like technically the Samsung fab has slightly more advanced equipment than the TSMC fab. These will both be made in the U.S. In one TSMC in Arizona, Samsung in Texas, but it's we're going to make, starting off, just to be confident of having our goal, explicit goal, is to have an oversupply of AI5 chips. Because if we have too many AI5 chips for the cars and robots, we can always put them in the data center. So we already use AI4 for training in our data center. So we use a combination of AI4 and NVIDIA hardware. We're not about to replace NVIDIA, to be clear, but we do use both in combination, AI4 and NVIDIA hardware. And the AI5 excess production we can always put in our data centers. NVIDIA keeps improving. The challenge that they have is that they've got to satisfy a large range, a lot of requirements from a lot of customers. But Tesla only has to satisfy requirements from one customer. That's Tesla. That makes the design job radically easier, and means we can delete a lot of complexity from the chip. I can't emphasize how important this is. So like when you look at the various logic blocks in the chip, as you increase the number of logic blocks, you also increase the interconnections between the logic blocks. So you can think of it like just highways. Like, how many highways do you need to connect the various parts of the chip? And especially if you're not sure how much data is going to go between each logic block on the chip, then you kind of end up having giant highways going all over the place. It becomes an almost impossibly difficult design problem, and NVIDIA's done an amazing job of dealing with almost an impossibly difficult set of requirements. But in our case, we're going for radical simplicity, and the net effect is that I think AI5 will be the best performance per watt, maybe by a factor of 2 or 3, and the best performance per dollar for AI, maybe by a factor of 10. So, that's, we'll have to, the proof's in the pudding. So obviously we need to actually get this chip made, and made at scale. But that's what it looks like.
Great. Thank you, Elon. We've already covered unsupervised FSD. So the next question is, instead of trying to replace hardware 3 with hardware 4, why not give an equal incentive to trade in for a new vehicle?
Yeah, we've not completely given up on hardware 3. However, over the last year, we've offered the customers the option to transfer FSD to their new vehicle, which at times we've been running some promotions. If they got FSD, they can get better preferential rates. So we've been definitely taking care of this, but we do want to solve autonomy first, and then we'll come back with a way to take care of these customers. These customers are very important. They were the early adapters. For what it's worth, my daily commuter is a hardware 3 car, which I use FSD on a daily basis. So we will definitely take care of you guys.
Great. Thank you.
In addition, once the V14 release series is fully done, we are planning on working on a V14 Lite version for hardware 3, probably expected in Q2 next year.
Awesome. Thanks, Ashok. Alrighty, our final question from Say is, how long until we see self-driving Tesla semi-trucks? And could you see this technology replacing trains?
Yeah, so I guess I'll start with that in terms of the semi production plan and schedule. So the factory is going on schedule. We've, completed the building and are installing the equipment now. We've got our fleet of validation trucks driving on the road. We'll have larger builds towards the end of this year, and then our first online builds in the first part of next year, ramping into the Q2 timing with real volume coming in the back half of the year. So that's going quite well, and that's the first step to obviously getting autonomous trucks on the road. In terms of trains, they're really great for long point-to-point deliveries. They're super efficient, but that last mile, the load unload, can be better served for shorter distances with autonomous semis, and that would be great. And so we do expect that to probably shift in as we, really, as Elon said, change the way transportation is considered. And so we're looking forward to that timeline. And Ashok, I know you can take the full self-driving part.
Currently, the team is super focused on solving for passenger vehicle autonomy. That said, the same technology will extend quite easily to the semi-truck once we have a little bit of data from the semi-trucks.
Great. And now we will move over to analyst questions. The first question comes from Emmanuel at Wolf. Emmanuel, please go ahead and unmute yourself.
Great. Thanks so much. Hi, everybody. So, Elon, you talked about expanding production of vehicles as fast as possible now that you have confidence in the unsupervised autonomy. How should we think about that in the context of your existing capacity of 3 million units? Is that where you're hoping to get volume to? What sort of timeline are we talking about? And would this require, some level of boosting or incentivizing demand? Like, would this basically be prioritizing volume over near-term profitability given the longer-term opportunity?
Well, our capacity isn't quite 3 million, but it will be 3 million at some point. Aspirationally, it could be 3 million within. We could probably hit an annualized rate of 3 million within 24 months, I think, maybe less than 24 months. Bearing in mind, there's an entire supply chain, like a vast supply chain that's got to also move in tandem with that. But we're gonna expand production as fast as we can, and as fast as our suppliers can sort of keep up with it. And then we're going to think about where do we build incremental factories beyond that. Like the single biggest expansion in production will be the Cybercab, which starts production in Q2 next year. That's really a vehicle that's optimized for full autonomy. It, in fact, does not have a steering wheel or pedals, and is really an engineering optimization on minimizing cost per mile, for fully considered cost per mile of operation. So that's for our other vehicles, they still have a little bit of the horseless carriage thing going on, where obviously if you've got steering wheels and pedals and you're designing a car that people might want to go, do fast acceleration and tight cornering, like high performance cars, then you're going to design a different car than one that is optimized for a comfortable ride, but doesn't expect to go past sort of 85 or 90 miles an hour, and it's just aiming for a gentle ride the whole time. That's what Cybercab is. Yeah, so it's. Do I think we'll sacrifice margins? I don't think so. I think the demand will be pretty nutty. Here's the killer app. Really, what it comes down to is, can you text it? Can you text while you're in the car? And if you tell someone, yes, the car is now so good, you can be on your phone, and text the entire time while you're in the car, it's anyone who can buy the car will buy the car. And a story. So that's what everybody wants to do. In fact, not everyone wants to. They do that, and that's why, in fact, the reason you've seen like there's been an uptick in accidents, pretty much worldwide, is because people are texting and driving. So autopilot actually dramatically improves the safety here, because if somebody's looking down at their phone, they're not driving very well. So that's really the game changer. And you know, we do see, like, at this point, I feel, you know, essentially 100% confident. I say not essentially, 100% confident that we can that we can solve unsupervised full self-driving at a safety level much greater than human. So we've released 14.1. We've got a technology roadmap that's, I think, pretty amazing. We'll be adding reasoning to the car. Our world simulator for reinforcement learning is pretty incredible. Like our when you see it, the Tesla reality simulator, you can't tell the difference between the video that's generated by the Tesla reality simulator and the actual video. It looks exactly the same. So that allows us to have a very powerful reinforcement learning loop to further improve the Tesla AI. We're going to be increasing the parameter count by an order of magnitude. That's not in 14.1. There are also a number of other improvements to the AI, just that are quite radical. So it's this car will feel like it is a living creature. That's how good the AI will get with the AI4 computer. This is before AI5, and then AI5, like I said, is by some metrics 40 times better. Let's just say safely, it's a 10x improvement. So it might almost be too much intelligence for a car. I do wonder, like, how much intelligence should you have in a car? It might get bored. Actually. And then one of the things I thought, like, well, if we got all these cars that maybe are bored, well, while they're sort of, if they are bored, we could actually have a giant distributed inference fleet, and say, like, well, if they're not actively driving, let's just have a giant distributed inference fleet. You know, at some point, if you've got like tens of millions of cars in the fleet, or maybe at some point 100 million cars in the fleet, and let's say they had at that point, you know, I don't know, a kilowatt of inference capability of, you know, high performance inference capability. That's 100 gigawatts of inference distributed with power and cooling taken with cooling and power conversion taken care of. So that seems like a pretty significant asset.
Great. Thanks, Elon. The next question comes from Adam from Morgan Stanley. Adam, please feel free to unmute yourself. Adam, go ahead and ask your question. Seems like we might be having some audio issues with Adam, so we'll come back to you. The next question will then come from Dan from Barclays.
Hi, good evening. Thank you for taking the question. Elon, I know that Tesla is really focused on, with Master Plan 4, bringing AI into the physical world. And I think we've seen over the past, you know, this willingness for Tesla to engage and go into new markets, new TAMs. So when you think about the growth prospects, how do we define the areas that are really within Tesla's core competency versus where do you draw the line for markets or AI applications that are outside of Tesla's core competency?
Actually, I'm not sure what you mean by AI applications outside of Tesla's core competency. But I mean, we didn't have any of these core competencies when we started, so it's like we had 0 core competencies, total competency of 0 actually. So I mean, you can think of Tesla as like, I don't know, a dozen startups in one company. And I've initiated every one of those startups. So it's we didn't used to make battery packs, so stationary battery packs, but now we do. We make them for the home, make them for utility scale with Powerwall Megapack. We created the supercharger network globally. No one else has created a global supercharger network. In fact, that North American supercharger network is so good at that basically every other manufacturer in North America has converted to our standard, and uses the Tesla supercharger network. But if it was so easy, why don't they just do it? And the chip design team started that from scratch. The Tesla AI software team was started from scratch. I literally just say, hey, we're going to start this thing. I post it on Twitter, now X, and then join us if you'd like to build it. In fact, Ashok was, I believe, the first person I interviewed for the Tesla Autopilot team, which we now call the Tesla AI software team, because it is the AI software team. So it's core competencies created while you wait. Optimus at scale is the infinite money glitch. It's like it's difficult to express the magnitude of, like, if you've got something if Optimus, I think, could probably achieve 5x the productivity of a person per year because it can operate 24/7. It doesn't even need to charge; it can operate it tethered, so it's plugged in the whole time. That's why I call it like a future of sustainable abundance, where working will be optional. There's a limit to how much AI can do in terms of enhancing the productivity of humans, but there is not really a limit to AI that is embodied. That's why I call it the infinite money glitch.
I mean, one thing which I'll further add is, I mean, people forget, like, our first iteration of Autopilot was 10 years back. So, Elon had started this way back in the day.
We got the tweets to prove it.
Exactly. And then even on the Optimus side, right, as much as people think, okay, this is a new thing, I still remember, was it 4+ years back, we were in a finance meeting with Elon, and Elon said, hey, our car is a robot on wheels. And that's where we started developing. In fact, most of the engineering team, which is working on Optimus, has come from the vehicle side. And that's why, when we talk about manufacturing prowess, we have the wherewithal, because the same engineers who worked back in the day on drive units are working on actuators now. So that's where we can do, if there is any company which can do it at scale, that is going to be us.
But we also have actually added a lot of new engineers as well to the team. So there's actually a lot of the credit for the Optimus engineering is actually also new engineers, many of them that are just out of college, actually. So the Optimus engineering team is a very talented engineering team. I'd say, like, wow, actually. So, the Optimus reviews at this point are there's the engineering review, and then there's the manufacturing review being done simultaneously with an iterative loop between engineering design and manufacturing. Because then we see we design something and we say, like, oh man, that's really difficult to make. We need to change that design to make it easier to manufacture. So we've made radical improvements to the design of Optimus while increasing the functionality, but making it actually possible to manufacture. Like, I'd say Optimus 2 is almost impossible to manufacture, frankly. But to Vaibhav's point, we've gone from a person in a robot outfit to what people have seen with Optimus 2.5, where it's doing kung fu. It was like Optimus was at the Tron premiere, doing kung fu, just out in the open, like with Jared Leto. Like there wasn't nobody was controlling it. It was just doing kung fu with Jared Leto, at the Tron premiere. You can see the videos online. Actually, the funny thing is, like, a lot of people walked past it, thinking it was just a person. Even though with Optimus 2.5, you can see that it has, a waist that's 3 inches wide, which is obviously not a human. But the movements were so human-like that a lot of people didn't realize they were looking at a robot. So, and what I'm saying is, like, Optimus 3 will be a giant improvement on that, and made at scale. But like I said, a very difficult thing. The Optimus sort of engineering and manufacturing reviews, and there's the Friday night meeting with Optimus, which sometimes goes till midnight, and then my Saturday meeting is the Saturday afternoons with the AI 5 chip design team. So those two things are crucial to the future of the company.
Great. And Dan, did you have a follow-up?
Yeah, just as a related, maybe you could just talk about to what extent are the AI efforts at Tesla and xAI complementary, or are they just different forms of AI? Maybe you can just help distinguish for the audience. Thank you.
Yeah, there are different forms of AI. So the xAI, so Grok is like a giant model that you could not possibly squeeze Grok onto a car. That's for sure. It is a giant beast of a model. It's with Grok, it's trying to solve for artificial general intelligence with a massive amount of AI training compute and inference compute. So, for example, for Grok 5 will actually only run effectively on a GB300. That's how much of a beast that Grok 5 is. Whereas Tesla's, models are, I don't know, maybe about less than 10% the size, maybe closer to 5% the size of Grok. So yeah, they're really coming at the problem from very different angles. xAI and Grok are they're competing with Google Gemini and OpenAI ChatGPT and that kind of thing. And some of it's complementary. I mean, for example, for Grok Voice, being able to interact with Grok in the car is cool. Grok for Optimus voice recognition and voice generation is Grok, so that's helpful there. But they are coming at it from kind of opposite ends of the spectrum.
Alrighty. Adam, let's give it another try. When you're ready, please unmute yourself for the next question. Alrighty, unfortunately, still having audio issues. So we're going to move on to Walt from Lightshed. Walt, please go ahead and unmute yourself.
Can you hear me now?
Yes.
Perfect. Thank you. Just getting back to Austin, if you can remove the safety driver at your end, is the limitation in the Bay Area just regulatory, or is it kind of the market by market learning process? And I guess similarly in the 8 to 10 markets that you mentioned to get added, is the decision there to put a safety attendant in the passenger seat or the safety driver in? Is that like your step-by-step process to opening up a market, or is it really just the regulation in the individual market?
Well, I think even if the regulators weren't making us do it, we'd still do that as the sort of right sort of cautious approach to a new market. So just to make sure that we're being, paranoid about safety, I think it makes sense to have a sort of either safety driver or safety occupant in the car when we first go to new markets to confirm that there's not something we're missing. Because all it takes is like 1 in 10,000 trips to go wrong, and you've got an issue. So it's just to make sure, like, is there some peculiarity about a city, like a very difficult intersection, or I don't know, something that's an unexpected challenge in a city for that 1 in 10,000 situation. And I think we probably could just let it loose in these cities, but we don't want to take a chance. And like, what we're talking about here is maybe 3 months of safety driver in a new metro to confirm that it's good, and then we take the safety driver out, that kind of thing.
Okay, and then on FSD 14, it has a different feel than 13, and it's also, I think, a little different than what it feels like in Austin. Is it basically different development path that you're doing in terms of the robotaxi stuff versus what you're dropping to the early adopters? And when you push these new builds, is it that you're looking for notable improvements in intervention rates, or is that largely solved and it's more about adding the functionality like the parking, the drive modes, or just the overall comfort?
No, the first priority when we release a major new software architecture for Autopilot is safety. So it starts off with safety, obviously safety prioritized, and then we solve comfort thereafter, which is why I don't recommend people take the initial version. Like that's why I say, like, most people should wait until 14.2 before they actually download version 14, because by 14.2 we'll have addressed many of the comfort issues. The priority is very much safety first, and then thereafter the comfort issues. That's why most people, I'm like, it'll be a little, like, it'll be safe but jerky. We just need time to kind of smooth the rough edges and solve for comfort in addition to safety with a major news Autopilot architecture change. But it really is. I mean, I know what the roadmap is for the Tesla real world AI, and at very granular detail. Obviously, Ashok is leading that. And I mean, I spent a lot of time with the team going, in like excruciating detail here on what we're doing to improve the real world AI. Like I said, this car is going to feel like it is a living creature, and that's with AI 4 before even AI 5.
Yeah, the roadmap is super exhilarating. Like, it's like so, like, waiting so much, like, release all the stuff we are working on in terms of, like, what we ship to customers versus robotaxi. It's mostly the same. Obviously, customers have some more features, like, they can choose the car wants to park in a spot or drive or something like that, which is not super relevant for robotaxi. But there's only like a few minor changes like those ones. But the majority of the algorithms and the architecture, everything is the same between those two platforms.
Yeah, but and as I mentioned earlier, like, we'll be adding reasoning to, I don't know, Ashok, is that like reasoning in like 14.3, maybe 14.4, something like that?
Yeah, 3 or 4, by end of this year for sure.
Yeah. So with reasoning, it's literally going to think about which parking spot to pick so it's going to say, this is the entrance, but actually probably there's not a parking spot right at the entrance. If it's a full, if the parking lot is fairly full, the probability of an open parking spot right at the entrance is very low. But actually what it'll simply do is drop you off at the entrance of the store and then go find a parking spot. But it's going to get very smart about figuring out a parking spot. It's going to it's going to spot empty spots much better than a human. It's got 360-degree vision, and it's going to, like I said, just it's going to use reasoning to solve things.
And putting that all inside the computer that has AI4 is the actual challenge. That's what the team is working on. Because obviously you can do reasoning on the server that takes forever, but then in car you need to make real-time decisions. So fitting all that into the computer that's in the car, that's the challenge.
Yeah, that's why I say I have a pretty good understanding of like AI, the sort of the giant model level with Grok and with Tesla, and I'm confident in saying that Tesla has the Tesla AI has the highest intelligence density. When you look at the intelligence per gigabyte, I think like Tesla AI is probably an order of magnitude better than anyone else. And it doesn't have any choice because that AI has got to fit in the AI full computer. But the discipline of having that level of AI intelligence density will pay great dividends when you go to something that has an order of magnitude more capability like AI5. Now you have that same intelligence density, but you've got 10 times more capability in the computer.
Great. The next question will come from Colin at Oppenheimer. Colin, please unmute yourself when you're ready. Colin, go ahead and unmute yourself, please.
Thanks so much, guys. I appreciate you bringing up the challenges of hand dexterity in humanoids, along with the complexity of the supply chain and the vertical integration you guys are pursuing. I'm just trying to harmonize the timeline for the start of production, next year with the current state of the supply chain and what sounds like a fair amount of work remaining on the dexterity before you can really freeze the hardware design and start to scale up production.
Well, the hardware design will not actually be frozen even through start of production. There'll be continued iteration because a bunch of the things that you discover are very difficult to make. You only find that pretty late in the game. So we'll be doing rolling changes for the Optimus design even after start of production. But I do think that the new hand is an incredible piece of engineering. And that's like I said, we'll have a production intent prototype ready to show off in Q1, probably February or March, and then we're going to be building a million unit Optimus production line. Hopefully with a production start towards the end of next year. But that production ramp will take a while to get to an annualized rate of 1 million because it's going to move as fast as the slowest, dumbest, least lucky thing out of 10,000 unique items. But it will get to 1 million units, and then ultimately, we'll do Optimus 4. That'll be 10 million units. Optimus 5 maybe 50 to 100 million units. I mean, it's really pretty nutty.
Alrighty. That is unfortunately all the time we have for Q&A today. Before we conclude, though, Vaibhav has some closing remarks.
Thanks, Travis. I want to take the time to talk about an extremely important vote, which is being held on November 6th. The meeting will shape the future of Tesla, and we are asking you as our shareholders to support Elon's leadership through the 2 compensation proposals and the re-election of Ira, Kathleen, and Joe to the board. Note that it is a team sport, and here at Tesla, the board is an integral part of the winning team. Shareholders are at the center of everything we do at Tesla, and our special committee has laid out a compensation package. Like Elon said, we don't even want to call it a compensation package.
Yeah, it's not. The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane. But and I think that sort of number is in the mid-20s approximately. As a company that has already gone public, we've investigated every possible way to how do you achieve increased voting control without is there some way to have like a super voting stock? But there really isn't. There is no way to have a super voting stock after you've gone public. But for example, Google, Meta, many other companies have this, but they had it before they went public, and so it sort of gets, I guess, grandfathered in. Tesla does not have that. So it's just, like I said, I just don't feel comfortable building a robot army here and then being ousted because of some asinine recommendations from ISS and Glass Lewis who have no freaking clue. I mean, those guys are corporate terrorists. And the problem, so let me explain the core problem here is that so many of the index funds, the passive funds, vote along the lines of whatever Glass Lewis and ISS recommend. Now, they've made many terrible recommendations in the past that, if those recommendations had been followed, would have been extremely destructive to the future of the company. But if you've got passive funds that essentially defer responsibility for the vote to Glass Lewis and ISS, then you can have extremely disastrous consequences for a publicly traded company if too much of the publicly traded company is controlled by index funds. It's de facto controlled by Glass Lewis and ISS. This is a fundamental problem for corporate governance because they're not voting along the lines that are actually good for shareholders. That's the big issue. I mean, that's what it comes down to. ISS, Glass Lewis, corporate terrorism.
Yeah, and I would say, the special committee did an amazing job in constructing this plan for the benefit of the shareholders. There's nothing which gets passed on till the time shareholders make substantial returns. So that's why, in the end, I would say, I would urge you to not only vote on the plan, but also vote on all the 3 directors because of their exceptional knowledge and experience. And literally, we at Tesla work with these directors day in, day out. I mean, there is not even a single day that one of the directors I haven't spoken to or one of my colleague hasn't spoken to. And even the directors out here are not just reading out of PowerPoint presentations. They're actually working with us day in, day out. So again, I just urge you guys as shareholders to vote along the board's recommendation. Thank you, guys.
Great. Thank you, Vaibhav. We appreciate everyone's questions today. We look forward to talking to you next quarter. Thank you very much and goodbye.
Oh, okay. How do I turn that off?
Taking beats. Oh, that was that last piece. ISS Glass's corporate terrorism. It's like I was thinking, what's Alexander thinking about that? He must have been laughing.
I mean, he's right. He's right. He's so right. And he actually liked my message where I said the other day, if I don't need another mission in my life, right? I'm 60 years old. I've done my career. I'm good. My kids are good. My husband's good. Everybody's good. But I still feel this urge in me to finally educate retail shareholders. This has been going on for years, and Herbert has heard me scream for years. Index funds, cheap index fund is terrorism because they don't want your money to make management fees. They want your money for political influence. And then behind them, I mean, I'm not even saying the Vanguards and State Street and Fidelity use ISS and Glass Lewis. That's not true. But the ones behind it, the smaller funds, they don't do their homework. When they have an S&P 500 tracker, they just vote with whatever Glass Lewis or ISS tells them to vote. And no, I'm not grandstanding. I hate these stupid comments in the YouTube chat. I'm not grandstanding. I'm telling you, this is a real issue that retail shareholders should think about. Don't be stingy on your ETFs. Think about whether you want voting power, because that is what it really comes down to. If you're giving it away to 2 institutions, one of which is actually Canadian, if you think that's the right thing to do, because you vote actually in the economy the same way you vote politically. And he's completely right. And I think we have to do a lot of work to educate people, because all they want is just a cheap little ETF that does their S&P, and that is it. So no, I'm not grandstanding. But I mean, I have 15 pages of notes, and we have our solution CERN. The big expense is the retirement of Dojo.
Yep.
I mean, it killed my heart when I got it, but that was it. That was it.
Legal expenses, Dojo, shareholder meeting costs.
Restructuring. Yeah, I mean, bullshit. Shareholder meeting costs. The chairs in the lobby, bullshit. I mean, just so that everybody knows, I'm again lobbying that we're getting next year a bigger venue. I've been with IR this morning, not later than this morning, saying, I'm so fed up with having to have all these people unhappy they couldn't get invited and all that, because I mean, it seems like they're closing, right? There's no second wave of invites going out, and I really want them to consider a bigger venue. I understand the security of Elon is first, and they should spend money on the security of Elon, but I mean, us shareholders, we're so motivated, we're so active. I think we deserve our shareholder meetings. But anyway, so legal expenses, I get that. Shareholder meeting, I get that. But the big one is the retirement of Dojo.
And the other one was employee compensation costs for the AI team. So
correct.
If Mark Zuckerberg
and that is going to go up.
$100 million for people, then Tesla has to pay up too.
That's correct.
Okay, so it looks like that they didn't reveal a lot of information in the actual deck that they shared with us. And even in the first half of this call, pretty well standard. And then in the question answers, that's what we heard, a lot of new things. So first of all, the self-driving, the person in the car will be removed by the end of this year. That they will always start off with somebody in the car, whether it's a person in the car driving, and self-supervised, or a monitor, but then they'll remove them. It takes about 3 months. Very, very confident. He said 100% confident that this software is solved autonomy to at least be as safe as a human, and things are just going to improve from here. So that's the biggest news, right? And then he did say that we're going to make 1 million Optimus, or we're going to have a production line that will create 1 million Optimus by the end of next year in 2026. It's going to be really hard to get there. And they will review the Optimus production level Optimus, maybe that's version 3, in Q1 of next year, closer to March. But that's when they will have production lines already in place. Didn't say anything about Cybercab production, except that it's on track. Those are the big things that I saw. Q2?
Q2 he did say.
What did he say about Q2? Oh,
That's
biggest will be production of Cybercab. Yeah. And what else did you guys get? Those are the biggest ones.
I have
go to your list. Yeah.
It's a long list. Well,
you have it up?
I do. I'm trying to see, like, prioritizing no, I don't have a deck for it. No.
Okay.
Sorry, I was distracted. A scam call is calling me from Google. Every time. It's amazing. Can we kill that? You guys go ahead. I've got all my notes written down. It's all very rough.
Production ready prototype for Optimus will be Q1, likely March. We'll build 1 million unit Optimus production line towards the end of the next year. It will be a while to get it as fast as likely the least part of 10,000 unique parts. So we don't know if we'll get there. Optimus 4 will be 10 million units. Optimus 5 will be 15 to 20 million units. It's pretty good.
Yeah.
Right.
One thing that I heard was that they reached their 6 billion milestone of FSD miles. And this was something that Elon mentioned years ago about being a critical point, and it seems to be accurate.
Isn't it amazing?
I got the first time an FSD take rate, which was 12% of the fleet.
Yeah.
Yes.
Which is actually lower than expected.
Really? I thought that was higher. I didn't think they were above 5.
No, because at the Jay Leno thing, they leaked that it was in the teens. That means 13 plus. Yeah. So it's lower.
I didn't realize that. Okay.
Yeah.
And
maybe
then
it down towards the end of the quarter.
Yeah, but Elon has confirmed several times, right? The real value of FSD, beyond it just be cool feature, is when you can text while you're driving, he said. And if you can text without driving, guess what the percentage will be? 80%? 50%, maybe even 100%, right? Eventually.
Yeah. He said something very interesting in V14, and then they'll be adding reasoning in version 14.3. They'll drop you off at the entrance. It'll figure out what to do next, find a parking spot, and use reasoning to solve other things like maybe paying for things at a fast food outlet or something. That was interesting. He also, was very happy to hear him, and said, when the car is bored, maybe AI5 is too powerful. And I've been talking about fleet inference, and you have too, for a long time. The fact that he's clued onto that is extremely good. And these guys says we've got the energy, we've got the cooling, everything is sorted in the car. And of course, won't be low latency inference, but it'll be inference nonetheless, which is good.
So is he talking about that the brains of this car is almost like a person, a creature that's alive, and it'll become bored? That's scaring me.
It is. But I think I want to come back to the numbers a little bit first. So there were improvements in all numbers. Revenue increased by 33% in China, 29% in Asia Pacific, 28% in North America, Europe, Middle East, Asia, 25%. Everybody that's screaming, "Oh, this is America, and the tax credit is coming to an end, and it's all going to go down a cliff." No. Look at the numbers in the rest of the world. It's very important. Plus 33, plus 29, America plus 28, Europe, Middle East, Asia plus 25.
Where's the brand damage in that?
No, there is brand damage. Sternberg.
Sternberg's back. Stock, James, stock fell after hours. It looks like it's still down by 12%. It's still 26. Where is it now?
It fell down to 418. It fell down to 418. And it rebounded to 424. So it took a big dip after Elon started talking. And I don't know, like when I was trying to, there's a couple of things that were really good for me. One was the chips and AI hardware breakthrough, talking about how they're hedging between Samsung and TSMC. And then he gushed about his design. He said he's put more mind share into this chip design than Optimus. And that's contradictory to what I heard him say before. I could be wrong there. But he said AI5 will be 40x better than AI4. And it'll use 2 to 3x less performance per watt and per dollar 10x better, which is stunning. So this AI5 will be very special. Another thing that was kind of weird was the 3 million units. I thought we were close to 3 million units. He said not yet, but within 24 months. That was a little bit of a slight disappointment too. Who thought they already had 3 million of capacity? I certainly did. And that it also, the fact that the out-of-the-box processing for Cybercab should easily be able to get to 1 million units pretty fast. Where's that going to come from? And then 24 months, like I was expecting at least 4 million in 24 months. So I was way off there.
I'm still in my numbers. Sorry, I'm still in my numbers. 400 million lost due to tariffs, half in the automotive sector, half in the energy sector. 400 million. And then we had this restructuring. Free cash flow, 4 billion. CapEx this time, 9 billion, but it's going to be substantially higher 2026. Mark my words, the board will be against an XAI investment. They know how much CapEx they need. They have a 41.6 million cash treasure now. They're going to push this out in time. They may not say it clearly, but no matter what we vote on, I don't think this is going to come very quickly. And the longer it goes, the more it will cost.
Alexander, are you concerned about the vote? You said earlier that it's a 50. All they need to do is hit 50% plus one. Elon can vote and Kimball can vote, but they spend a lot of time. They ended the show. The call with Ashok,
confirming.
The CEO saying we need to vote. Okay.
Yeah, confirming exactly what I said. This was his stage to talk to institutional investors. Institutional investors that are invested in Tesla and have an active role, not S&P trackers, but the ones that have an active role have to listen to these calls. So what happened at the end was him telling them, stop using ISS, stop using Glass Lewis. We're not. Us retail investors, we are not. But what he's doing is he addressed them and said, I know you haven't voted yet. I know you will vote only the last day. But don't listen to these guys because they have no clue what they're doing. If you would have listened to them, we wouldn't be where we are. So this was his pledge to the institutional investors. Now, do I think that on the main subjects we'll have 50% is what we need? Again, we need 50% of those who voted. So absentee don't matter in these cases. Yes, I do believe we'll get there because Elon has 14.5% plus retail plus Kimball plus ARK plus Barron plus some of the others. We will be there. But what he wants is a decisive victory. He wants this to be a 2/3 or even more, right? He wants to get to the levels that we were last year when we left, when we had the revote and when we left Delaware. So this was his plea to them, saying, look, don't listen to these guys. They have no stock. They have no idea. This is politically motivated. Index fund managers are lazy guys. You institutions do your homework.
Yeah. Thank you for explaining that. So I don't know. When I look at it, I go, robo-taxi is most important for us at this point. And I've heard really good info. This is fantastic info. We're going to remove the safety driver by the end of this year. We're on track to how many metro areas?
8 to 10.
8 to 10.
But I mean, we're not talking half of America anymore, right? Remember?
No. Yeah. Agreed. But removing the safety driver, 8 to 10 things that are in place. FSD 14 looks like it's great. It's going to have reasoning by the end of this year. They feel very, very confident about that. That's great. And then with the Optimus, there's some good news there, right? I mean, they actually had the production line is starting. They're going to hit 1 million units by next year. That's a friggin' 1 million unit run rate by next year. That's pretty impressive if that is the case. And then, it's going to become a money glitch. And then he just keeps confirming that there's no one is even nearby. If you can't do the hands, if you can't do the manufacturing, you don't have the AI, these are critical things. So I felt that was very good news for Tesla. Am I missing something?
Well, just on Optimus, a clarification. I don't think it's 1 million run rate by the end of next year. They're building 1 million manufacturing capacity, and it'll take a couple of years to ramp up as they build a supply chain from scratch.
Okay.
Yeah.
Is that right? Okay.
Yeah. And then back to James's comments regarding the production capacity for autos. The company right now reports 2.35 or greater than 2.35 million capacity for autos. But my understanding is the factory footprint would allow them to scale up to about 3 million. So they wouldn't have to build another gigafactory until they get to that point. But Elon mentioned tonight that they're going to have to start thinking about where the next one's going to be.
Correct. He mentioned that. He mentioned that they're thinking about new factories then.
Yeah.
Yeah. And the other thing was AI5. I think AI5 we didn't talk enough about yet.
Yeah, let's talk about it.
AI5 having a much better performance per watt, 2 to 3 times what AI4 is, but per US dollars 10 times.
Yep.
And he just felt very, very strongly. No, sorry, it's 40 times better than AI4. It's 2 and 3 times better than anything else that's on the market at the moment, and in watt terms, and 10 times in US dollar terms. I mean, he didn't want to obviously damage anything of NVIDIA's image, but he seems to be very confident that this chip built by Tesla engineers for Tesla needs is exactly what is needed, is optimized, and is going to change the whole thing.
I think we need to do a deep dive of whether or not this means that can other AI companies like NVIDIA just create a chip, create the software, and let all other car companies just, take that? Or is this something that he's trying to be very clear, saying you need to have a powerful inference chip just this much to do the reasoning. You need to have the simulator. You need to have the data.
I think he made that very clear, Herbert, that that's not the case. He also mentioned, too, I think this is a really key point, that they want to have an oversupply of AI5 chips, right? They've got TSMC and Samsung making probably as many of these as they can. And the amazing thing with this is if they don't go in the cars or the robots, they can use them themselves in their own data centers to train the models. What a beautiful situation to have, and what an ideal customer for the semiconductor makers to have a company that can just take whatever they can produce. That's a dream customer.
Correct. Good. I thought it was a good call. I didn't find him overly joyous and motivated at the beginning. I actually wondered whether he was playing a computer game, but it's right. I mean, never a dull day in Elon land. But all the answers were good, were precise, good guidance. I still don't understand everything Weber is saying, so I have a tool that transcribes, so that helps me. But I found it was a good call, and I think we're going to have a very interesting shareholder meeting. For those who haven't voted yet and or have problems voting and are listening now, Bernd Ehrhardt, the general counsel of Tesla, just released the email of Innisfree. Innisfree is the proxy solicitor that Tesla employs to help people vote. And he gives very precise instructions what you have to put in that email. So we're coming to the same situation we had last year where people could send faxes. Now it's by email. So there is now an email where people can send their information that they can't vote, how many shares that concerns, what bank it's on, and all that. Send those emails, and Innisfree is going to look after you so that you can vote. I just reposted it. Repost it all, please, because this is one of the most important messages now in this lead up for the next 2 weeks. We have to bring this home, and we're going to bring this home.
Sounds good. James, last comments?
Yeah, I think for me, I always try to think big picture, 30,000 feet. The train is on the track. The Optimus ramp was impressive. The confidence in FSD, very impressive. The $4 billion in free cash flow, very impressive. But the market will not understand. And the good news is we have until the end of the year, maybe even into January next year, to stack low 400s. The stock is not going to rip off. Unless, of course, there is an incredible Optimus demo at the shareholder meeting. That's the only caveat. So it's good news for retail investors. Don't be sad if you see the price going down. If you see it going sub 400, that's a screaming deal as far as I'm concerned, from all that we heard today. Not financial advice.
And then, Søren, with your financial modeling, is anything moved forward, like a more higher FSD, autopilot, or robotaxi revenue? I didn't see that. Or what changed with your Optimus forecast?
Yeah, I think I'm going to need to consider that. In listening to the call tonight, and I'll listen to it again. And actually, I'm going to post a copy of the transcript later tonight on X. I know a lot of people look for that, and so I'm going to get that out. That takes a bit of work because I take a transcript that has all kinds of errors in it, and I try to error correct it. So it'll take me a couple of hours to get that out. But based on what I heard in the first pass, on this call, Elon seems very confident now, in my opinion, on the development of obviously robotaxi, and the fact that they're going to take out the safety drivers in parts of Austin by the end of the year. That's a really strong sign. And the fact that he's saying now that we are going to start adding to our manufacturing capacity in our factory so that we can start pumping out more vehicles. That's another strong signal, right? All these things have to happen before the revenue starts to ramp. So we're seeing the revenue precursors starting to appear now, right? And then same thing with Optimus. Again, the issue with Optimus is this is a whole new product. The supply chain doesn't exist. They have to do a lot of work to build this supply chain. So the Optimus ramp may be a little longer perhaps than I originally thought, but I think in my models, I've already assumed a really slow ramp there anyway. So I doubt that will change anything. And then I would just anchor on one of the final comments that Elon made. And I know James has talked about this many times, this whole idea of this infinite money glitch, right? That AI embodied is an infinite money glitch. And if you really think about what that means, Tesla shareholders should be super excited about the future, because Tesla has so many different moats around the business that other companies really can't compete against Tesla's manufacturing prowess, the chips that Tesla has, et cetera, et cetera. There's so many different things we can point to. And the company is setting itself up to have really at least two infinite money glitches, an robotaxi and an Optimus.
Yeah,
I'm as optimistic as I ever have been regarding Tesla. Of course, the near term of the next few quarters, who knows what? But you know what? For me, that doesn't really matter so much.
Yeah, he answered that question when somebody was asking him about what is your core competency, what other businesses might you get into, and yeah, if you have embodied AI, you can create many different businesses from scratch, as many as you want, anything you want. They will be able to create. Forget the 12 startups. We're going to have 1,000 startups. Pretty easy.
Potentially.
Well,
okay.
I wrote the Substack during the stream, so that's up already. My notes. So if there's any mistakes in there, let me know.
Multitasker. Wow.
Yes. Oh, my hand is sore, but it's good. No, but it's better to get it, what is it? The Talladega Nights. If you mean first, you're last. So, and I don't let perfection be the enemy of the good. But it was a fascinating call. I really enjoyed it. So
Perfect.
And,
Thank you,
and
guys.
it was one final thing as well, just to layer onto what Elon. Although he sounded a little low energy, he was extremely passionate about the future. But also worried about the governance terrorists. So that's a weird juxtaposition. Thank you, everybody.
Thank you.
Great job.
Thank you, James and Alexandra and CERN, and of course, Jeff, Larry, and Joe was fantastic.
Yeah.
Thanks, everybody. Bye, all.
Thanks,
Thank
Robert.
you. Bye-bye.